guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Hey, good morning. Welcome, everyone. We're going to get started in just a couple minutes here. It's almost 6 a.m. Eastern. We're going to go till 10. We're going to go over today's news, and then we'll get into the charts.
Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.
Hey, welcome, everyone. Thanks to everyone for joining Stocks Network Trading. My name is Ron. My partner is Dave. Welcome, guys. It's 6 a.m. Eastern. It's Monday, November 10. So thanks, everyone, for joining. Hope everyone had a great weekend. Hope everyone is well rested and ready to go this week. We're going to do some New York and some Tokyo sessions this week. So today and tomorrow are going to be 2 sessions. New York in the morning, and later this evening we're going to do some Tokyo sessions for about 90 minutes or 2 hours on gold. So hope everyone is ready this week. We do have some news. We have CPI and PPI later this week. And also there's some rumors that the government may open up. So that's big. This is a big week in the markets. And we just wrapped up our 2-day risk management bootcamp this weekend. We went 4.5 hours on each day, Saturday and Sunday. And we decided to do a 3rd day next weekend so we can get into the charts and learn a little bit more about risk management. So hope everyone's doing good. How's everyone? And we're going to go over all of this week's news. We're going to go over the earnings this week, and then we'll get into all of the charts, okay? So first things first, let's start off with the news. There is this that was released late last night. So right over here, the U.S. Senate has reached a bipartisan deal to extend the government funding in a major sign that shutdown is poised to end. So there is articles here if you want to read and further educate yourself on what's going on here, but we will see. So that's good that they've reached a deal, and we'll see. Looks like we're getting very close to the shutdown ending over here from Trump. So shutdown end in sight as Democrats back the Senate stopgap deal to reopen government. Okay, so that's in the news. And also, let's see what's happening today. So there's been today's not a busy day in the markets. You can see we don't have any like high impact news today. Little bit of news coming in Europe. We're going to have some FOMC speakers this morning. And not much going on today, okay? And then anytime if this government is still going on, the US data may be impacted by shutdown. Tentative events are subject to delay, revision, or cancellation, okay? Can you guys hear me okay? Everything is good? You guys are very quiet this morning. And Tuesday, right over here, tomorrow, there is some British news in the markets. You can see 2 a.m. Eastern, everything gets started pre-London. So if you are trading that. And then also notice tomorrow there's some bank holidays. So in Europe, we got French bank holidays. Moving into North America, we do have Canadian and US bank holidays due to November 11 Remembrance Day, okay? We'll still come in for a session, but the US banks will be closed tomorrow. So we'll be watching gold tomorrow, okay? So just take it easy when you have your local banks are closed. The volume might be a little bit different than normal, okay? But tomorrow is Remembrance Day, so banks are closed for tomorrow. Wednesday this week, okay? There's more news coming out of Europe. Again, a lot of low impact news. I'm more concentrated to see where that high impact news is. We don't have much in North America. We do Wednesday midweek. We do have some FOMC speakers. US, we do have the 10-year bond auction on Wednesday afternoon, just after 1 p.m. And that's about it. And then we get into some Australian high impact news later in the Asian session. Thursday, busy day, starting with a lot of UK British news pre-London on Thursday, 2 a.m. You have a high impact folder in the UK regarding the GDP month over month, and you have other low impact folders, a lot of them. Then we move into the London session and continuing to come out of there. Then we've got right here tentative, okay? So on Thursday, we have a lot of US red folders. So they may release these if they open up the government over here. And these are important folders. These are really important. These are our core CPI month over month, our regular CPI month over month, and our CPI year over year. So this is kind of our inflation news over here. So very, very high impact. This will affect the US dollar. Expect volatility at this time, but right now it says tentative. So normally these are released at 8:30 a.m. Eastern, but we still have the US government on shutdown. So we'll see maybe tonight, tomorrow, maybe during the week, they will open up the government and maybe release these folders, okay? And then we also have our US unemployment claims, our weekly unemployment claims that are released every single Thursday at 8:30, and we've missed, I think, 4 or 5 of these now because the government has been shut down for approximately 40 days, over 4 weeks now. So it started on October 1st and today's November 10. So we haven't had an unemployment claims release as of yet. So maybe we'll get something this weekend, okay? And then when they do release these, expect some volatility because it's been a while since they've released some high impact news, okay? And then continuing to go through at noon that day, crude oil inventories. Oil is moving bullish right now on the verge of government opening up. If you're an oil trader, keep an eye on your inventories. We got FOMC speakers. Then we have our 30-year US bond auction, same time, 1:01 p.m. Following the 10-year bond auction. And then we do have some Asian and Chinese news over here, okay? And finishing off the week, Friday, some European news, French news, Italian news, some Eurozone news, some coming out of Europe. Then we have some Canadian news. And then again, we have some high impact news. So you can see the high impact news is Thursday, Friday at the end of this week. We're in the US. We have our CPI on Thursday, and then you can see our tentative folders regarding PPI. So this is our Producers Price Index. So we have our core PPI scheduled month over month, core retail sales over here, and our PPI month over month and retail sales. So there's 4 high impact red folders, all tentative. If they do release these, it'll be approximately 8:30 a.m. Eastern. We can look to see if they'll release these. But again, these could be delayed or canceled due to the government shutdown unless the government opens up, okay? So we'll keep our eyes on this. High impact news is near the end of the week in the US, Thursday, Friday, and we also have bank closures on Tuesday for Remembrance Day this week, okay? So that's what's going on news-wise. Earnings in the pre-market today, Monday morning before the open, we have Pagaya Technologies, Barrick Mining, Monday.com, Instacart, Blackstone Secured Lending Fund. Again, there's a lot of earnings in the pre-market today. I look for those bigger names that we're all familiar with, the ones that could actually move the S&P 500, NASDAQ, or Dow Jones. I don't think any of these will have a significant impact today, unless you're trading these or investing in these individual companies through buying shares of the company, or possibly you're trading them through options, okay? Not much going on pre-market today. In the after hours, later today, we have Rigetti Computing, CoreWeave, Big Bear, Rocket Lab, Plug Power, so if you're in electrical vehicle sector, we have Occidental Petroleum Corp, so some oil and energy happening, but again, no big names. We went through last week, last couple weeks were all the tech earnings, all of the big names. Prior to that, we went through all the financial earnings, so you can see now earnings are just other companies, but not those big names, okay? And then tomorrow morning, before the open, Tuesday, we have Nebius Group, we have C Limited, Endeva. Again, no big names. I look for those big household names. Beyond Meat, this one is after the close Tuesday. Remember, this thing took off during COVID. It was Beyond Meat. This is all that fake meat and plant-based products. This thing has taken a massive nosedive since it kind of IPO'd. It took off, and this thing has dropped like 90 to 95% down, and I don't know. No one is touching it right now. If you wanted to buy something on discount, this thing is on discount, but it's also, you don't just buy something on discount. You want to buy something that is on discount and actually has some intrinsic value. This thing has no volume, I don't know, it's just dead. Look at the charts. Maybe we'll keep an eye on it, see if some volume does come in, but a lot of companies, a lot of restaurants have taken this off the menu. They don't even offer it anymore. So I don't know if this was just a fad. I'm not a fan of this Beyond the Meat. I've tried it once, but I like real meat. I'm a meat and potatoes kind of guy. I'm not this plant-based stuff. And then we also have Oklo Inc., American Integrity Insurance Group, all through here, okay? So, again, no big real names. We start to move into Wednesday before the open, midweek. Just going through these, not much. I know someone will say, well, Ron, there's a lot of earnings. There's a lot of companies. I understand that, but none of them are really like those big names. Maybe Cisco, we got something after the close on Wednesday. Pan American Silver Corp. But I don't see like Apple, Nvidia, Amazon, Costco, Home Depot, Walmart, Bank of America, like those big names that will move the markets, okay? This is a household name. So we've got Thursday before the open, Walt Disney Corporation, okay? So this is a security in US Dow Jones. So they report at 6:40 a.m. Eastern. They've made some mergers in the last few months over here. So we'll see how the earnings are. Regarding Disney. And then Thursday after hours, we have Applied Materials, Red Cat Holdings, New Holdings, Virgin Galactic. And then to finish off the week, there's probably not much going on Friday. We've got High Blockchain, American Bitcoin. So you can see that there's some Bitcoin and some Bitcoin blockchain companies over here. And then to finish off Friday evening, there might be one or a few companies here. Friday after the close, you can see it's a busy Friday actually. Normally when we look at Friday afternoons, Friday close in the weekend, there's maybe one corporation or nothing reporting, but here you got quantum computing and a few others, okay? Regarding earnings this week, nothing big. Nothing big. The only name is Walt Disney, and that's about it, okay? But there is lots of news in the markets. Right now, this one is hot. It's live right now. Senate advances a new bill to end the shutdown. Here's what's in it. So in a vote of 60 to 40, 8 members of the Democratic caucus joined with Republicans to end the Senate's filibuster. So this is live, guys. This has just been released like late last night, and we'll see if they in fact open up the government. So if they do, expect volatility. Again, expect volatility. So we just did a risk management boot camp all weekend regarding this stuff. So, you know, this is when you might have to lower your sizing, your position sizing, in case the securities that you're trading have a little bit of volatility on this. So this is how you have to kind of prepare yourself for volatility, okay? U.S. futures climb as hopes grow for end to the shutdown. Elon Musk is in the news. Musk vote shows Tesla is done being just a car company, so they want to do some other things regarding robots right now. Guys, Besant says Trump's $2,000 dividend may come via tax cuts. So Trump tweeted out there that U.S. citizens will be receiving $2,000 to help in this kind of U.S. Government shutdown. And it could be just another one of his empty promises. Remember when he was getting voted in, he promised everyone $5,000 from the Doge cuts. I still haven't heard of anyone receiving any money from that. So this could be just another, you know, just talking point. We'll see if you actually receive your $2,000. But what it is basically is you're getting your money back. During the tariffs, like how he's saying that we've brought in a lot of money, trillions of dollars on tariffs, it's the American consumers that are actually footing the bill for that. You, when you're going shopping, you're actually paying. The American consumers are paying Donald Trump and those trillions of dollars. It's not other countries are paying for it. The American consumers are footing the bill, and probably he made some money, and now he's going to give you guys a little bit back to make himself look good here. So any money coming back from the government is great, but you got to kind of look into this a little further. When it sounds too good to be true, it might be. We had this back in the day in COVID era too here in Canada. They were giving stimulus or CRB during the COVID times. I had some friends that took it, and then they ended up paying it back and with interest. So it's kind of like a scam. You got to be careful with this shit. Anytime government is giving you money, you always got to raise your eyebrows and question it. Nothing is for free in this world, just so you guys know. Oil gains on U.S. government shutdown optimism. Treasury yields right now rise after breakthrough on U.S. shutdown. So you can see there's a lot of green in the markets in anticipation that the U.S. government finally opens up. Okay, so that's all in the news right now. What else we got going on? Bank of England softens stablecoin stance with new proposals, and that's what's happening in the news. So, guys, in the pre-markets right now, S&P futures are up 1%, Dow futures up 0.43%, NASDAQ is leading the way, up 1.5%. Gold is doing really well, up 2% right now, $80 an ounce. Had a big open on Sunday night and continued to really push. Okay, so we'll take a look at all of those. Guys, we had that gold signal just on the close of kind of Friday in the looking for buys above 4,000. If you did entertain that, now we're sitting at 4,080 up there. So that's a big 800 point move if you kind of watch that going into the weekend. And guys, this is a free Telegram channel. It's pinned at the top of YouTube for all of you guys. We have 150 viewers on YouTube. Thank you guys for joining. Hit the like button if you guys can. Subscribe to the channel if you haven't already. And hit the notification bell. Also, pinned at the top is this free Telegram channel. So you get all of our links when we go live. There's free blogs available for you guys as well. This is the New York trading session blog. That's what we're going to be trading today, is the New York trading session. So maybe we should get familiar with this. We did one on the Tokyo session a couple weeks ago, because we will be trading also Tokyo later tonight. So get familiar with these sessions, okay, guys? And we just wrapped up our SST risk management bootcamp right here. It was scheduled for 2 days, but we're going to do a bonus third day because we want to get into the charts and answer some questions as well, because there was a lot of theory, a lot of on this PowerPoint presentation, but I'm sure that some of the snipers that attended learned a little bit more about risk management, and maybe they see how important it is now in trading, okay? And finally, guys, this is our website, stocksnipertraining.com. If you want to join myself and Dave, there's lots of courses, webinars, boot camps. So we're going to have that risk management boot camp uploaded right here for all of the members enrolled, and lots of webinars, okay? And the free blog that I was just talking about, it's available right over here if you go to more and blog. But first thing is, guys, here's our weekly trading schedule that gets updated every Sunday. So just so you guys know, this is the schedule for this week. So we have our live New York sessions, 6 a.m., 10. We're going to come back later tonight for a Tokyo session at 7 p.m. Tomorrow, with Dave in the private sessions, he's doing New York. I'm going to do post-New York and another Tokyo session. And then midweek Wednesday, Dave does New York. I'll do a Tokyo session. And again, Thursday, we have a New York and a Tokyo. And Friday, we're going to take a little bit of a break, okay? And then here's our free blogs, New York trading session. So real quick, guys, I'm just going to go over this with you guys because we are going to be trading the New York session. So I want you guys to get a little bit familiar with what we're trading and why this time of the day is very important, okay? So the New York session is a critical period in global financial markets, particularly what we do here in Forex trading. It operates between 8 a.m. Eastern and closes at 5 p.m. Eastern, okay? Coinciding with the opening hours of major U.S. exchanges, such as the New York Stock Exchange, that's NYSE, and NASDAQ. This session is known for its volatility and high trading volume, okay? So if you are over leveraged at this time, we have high trading volume and volatility, okay? So you got to be smart with your risk management and your sizing of your positions, which are driven by overlapping market activities and significant economic announcements. So some key features of this New York session that we trade is, number one, volume and volatility. The New York session experienced substantial trading volume, especially during its early hours when it overlaps with the London session. So London, as you guys know, opens up at 3 a.m. Eastern and it finishes at noon Eastern, 12 p.m. Eastern. So it kind of overlaps with the New York session. That's where you get a lot of European and American volume overlapping, and that's can provide volatility and excessive volume. So this is from 8 a.m. to 12 p.m. Eastern. So this is part of our session and going into post-New York, okay? This overlap leads to increased liquidity and tighter spreads, making it an attractive period for traders. Wall Street's influence is profound. The New York Stock Exchange and NASDAQ are among the largest stock exchanges in the world. Activity in these arenas can have ripple effects across other markets, influencing currencies, commodities, and indices. Number two, economic news and reports. Major U.S. economic indicators are released around this time, including non-farm payrolls, NFP. So they've canceled 2 NFPs now due to the U.S. government shutdown. GDP data has been canceled due to the government shutdown. And retail sales figures have been canceled, but we might see them released on Friday with the PPI and Thursday's CPI news. These releases can cause significant market movements. Earnings reports, what we just talked about, from U.S. companies also play a crucial role. Quarterly earnings seasons, we went through that where we had the financial season, big banks. 2 weeks ago, we went through where it was all tech season, and we're going to go through this again in the next quarter, in the next 3 months from now. When companies report their financial results, which can lead to heightened volatility in stocks and related assets. Finally, currency pairs. If you are trading Forex, USD currency pairs, example, the Euro USD, USD JPY, GBP USD, tend to be highly active due to the session's focus on U.S. markets. Traders often focus on these pairs for their liquidity and volatility. Okay, liquidity is necessary for you to get in and out of positions with favorable spreads. That's why you need to trade liquid assets. Okay. Number 4, impact of Wall Street. Okay, so Wall Street we know opens up at 9:30 a.m. Eastern, Monday to Friday, and during our session when we're trading. So we have to pay attention to this time. Why? Because movements in U.S. equity markets during this session often affect global risk sentiment. For instance, a bullish stock market may drive demand for higher risk assets globally, while bearish trends might increase safe haven flows into assets like bonds or gold. So you've seen that lately. There's been a lot of money flow going into gold as of late for the last few months. That's why we hit those all-time highs. Okay. This is kind of, I don't know if you guys can see this, but this is kind of normal trading hours of major and minor forex trading centers. So 2 a.m. Eastern to 10 a.m. we have in Germany our Frankfurt and Paris markets. You can see London is right here in the green. 3 a.m. to noon is the London session, European markets. Then you can see right here 8 a.m. What we're doing right now is called pre-New York. 6 a.m. is pre-New York. 8 a.m. is kind of where it really starts with all of the U.S. high impact news. And this is the New York market from 8 a.m. to over here to 5 p.m. Eastern. And you can see we have New York, we have Chicago, San Francisco, and Los Angeles all in there. And then we move into the after hours and then the other side of the world. Then we have Auckland and Wellington start up here. That's New Zealand. Then we have Sydney, Australia. Then our Tokyo session we're going to do later tonight. Starting at 8 p.m. Eastern, kind of the futures in the Tokyo market. And then we have Hong Kong and Singapore. And then you can see how it kind of overlaps going into Frankfurt, London, and then we move our way back. So this is kind of like a 24-hour cycle, Monday to Friday, of how the markets move in different sessions, right? And each session has different volatility, with New York being the most volatile. Each session has different securities you can trade, and each one of these sessions has their own exchanges, respectively, that you can trade. Okay. Importance of understanding the New York session. Strategic trading opportunities. Traders who understand the intricacies of the New York session can better strategize entry and exit points based on anticipated news events and historical patterns of volatility. Risk management. Awareness of the potential for sharp price movements helps traders manage risk more effectively, employing strategies such as setting appropriate stop loss orders. Comparative analysis with other sessions. So the London session that we just kind of finished came out of London. London is known for high liquidity. The London session overlaps with both the Tokyo and New York sessions. Its large trading volume makes it a prime time for major currency pair movements. Then we have the Tokyo session we're going to do later tonight. It's characterized by less volatility compared to London and New York. The Tokyo session sees influential activity in Asian currencies like the Japanese yen. However, due to its lower overall trading volume, it offers different dynamics and opportunities. Currently, in Tokyo, we focus on gold, and gold is moving rather well in the Tokyo session. So that's why we're going to implement some more Tokyo with gold, okay? And right away when the kind of futures market opens up, there's some big moves on gold. So we'll see if that continues into this week, okay? So some tips for traders. Monitor your economic calendars, what we just did this morning. Stay updated with scheduled economic announcements and earnings reports. This preparation allows you to anticipate and react to market moving events. Develop a routine. I hope you guys have now a trading routine every single day that you adhere to. Establish trading times that coincide with peak periods of activity and relevance to your chosen trading instruments. So complement your trading instrument with the pair. If you're trading in London, maybe you want to focus on more European assets like the DAX, the German stock exchange, as opposed to NASDAQ. If you trade currency, focus on the euro or the pound during European sessions as opposed to trading the Japanese yen. And then when we move into New York, focus on your US dollar currency pairs, focus on NASDAQ or US 30. You want to complement the session with the instrument you're trading due to volume levels, okay? Utilize technical and fundamental analysis. Combine technical indicators with fundamental insights derived from economic data and corporate earnings to make informed decisions. Alongside your technical analysis is your top-down analysis on your securities. Always start on the higher time frame and work your way down to the time frame that you feel comfortable trading. Manage emotions and stick to your plans. High volatility can trigger emotional responses. It's crucial to adhere strictly to a predefined trading plan and risk management strategy. Stay informed and regularly consume financial news and insights related to Wall Street developments and broader economic trends to maintain an edge in the market. So right now, what we're anticipating is the government in the US opening up. They've reached a kind of deal, but they haven't officially opened up the government yet. So we'll see if that's done this week, okay? And we have a lot of high impact news near the end of the week, Thursday, Friday in the US. Okay, so by mastering the nuances of the New York session, traders can optimize their performance and capitalize on the distinct opportunities this active trading period provides. Okay, and so these are all free blogs available for you guys. New York trading session. This was the Tokyo trading session. If you want, you're welcome to read all of these. Okay, there's a lot of blogs in here. Okay. They're all available for you guys, okay? And finally, guys, let's get into it. Everyone, thank you guys on YouTube for liking and subscribing. If you guys can hit that subscribe button, we're on our way, climbing this mountain to hopefully 88,000 in the near future, okay? Now, this is what you guys are here for. You guys are here for the charts. Let's get into it. We're going to get started with gold. And right now it's on the 5 minutes, but I'm going to do a top down. I'm going to bring it from the top and bring it down. So we're going to start off on the daily, go to the 4 hour, hourly. Finally, we'll revisit these 5 minutes, but then we'll have some points of interest. We'll have some zones, and we'll have some points of control, and maybe we'll see what the overall bias of the trend is, okay? Before we get into that, I just want to say thank you for everyone joining. Welcome, Conrad. Good morning. Mike, good morning. Ferdinand, good morning. Welcome, guys. Evie, welcome. Christoph, good morning. Thank you guys for joining. And everyone on YouTube, thank you guys for joining as well. We appreciate you guys. Welcome. Kaketka, welcome. Trev Beats, Sean, welcome, guys. Zablon, thank you guys for joining. Beep. Alex, welcome, guys. Alex, been a long time. Hopefully you're doing well. Thanks for joining. Okay, guys, so I'm going to start off on the daily, okay? If you're learning how to do a top-down analysis, this is the time to learn how to do it. If you've already, I hope you guys have already done your overall weekly outlooks on a higher time frame, and maybe we're going to match up our points of interest and our lines and things like that, okay? So this is how gold looks on the daily. So far, what I see is a nice little double bottom being produced right here. Here's the second leg. The second leg traditionally has more volume, and you can see the big breakout candle today. It is an impulse candle breaking out, just like as if it was a 5 minute breakout, but you can see it's a nice W breaking out. But we still have a lot of resistance right here. We still have 50% of this point of control of this big bearish candle, and we also have the all-time high supply up here. Can we get up here? Possibly, but we still have to fight through a lot of resistance to get up there. So let's figure out where these resistance levels are. Let's start from the highest and work our way down. And you can see that there has been a long bullish rally. Okay, all of this is to the all-time high. So even if you come all the way down here and where this double bottom is, it looks like it's just a pullback, still healthy pullback. Gold has not crashed all the way down. It's just holding right there. Nice pullback. Maybe we will continue to move up to that all-time high and get higher. However, it could just move up to areas of resistance right there and start to push back down. Okay, so that's what we have to watch for. Okay, so first things first, where is the all-time high? It's up right up here at where these wicks are. So I'm going to just make it orange regarding our all-time high. Here in Forex, the all-time high on gold is 4,380. Possibly you guys trading the futures, it's probably a little higher, close to 4,400 up there. Now, regarding a zone. So we find our all-time high, and what I'm going to do is bring it down to those bodies right there. So right there, I've now identified a zone, and we can see that the sellers were in control of that zone during that all-time high, and they pushed it down. Okay, so I'm stretching this all-time high zone into the future, and if we do come back up there, that could be possibly where the double top is going to happen. Right here, it comes back up. Let's say this leg comes all the way up there. That would traditionally be where the double top would be, right there, and then we could expect it to possibly come down. However, if the buyers are stronger and they break right through there, we have a new all-time high. It could be an impulse fake out of a new all-time high and come back down. However, if it does close above there on that breakout, if it comes back in, break out impulsively, but the volume closes above, you'll see a daily candle close above there, then we'll flip that red zone green to represent that it could turn from resistance to support, or sellers to buyers, or supply to demand, or from a zone to change, whatever you want to call it. I don't care what you call it, but what we look for is a confirmation to come down, retest here, see if the buyers are there, and in fact, if they're there, maybe they'll build this area, and then maybe we have a new all-time high. Okay, so we don't have to entertain that right now. We are nowhere near this red zone. We still have to work our way down and see our other resistance levels. So there was a big, massive bearish candle coming down right here that kind of engulfed everything, and this was coming from the all-time high, so that's rather strong selling pressure Tuesday, October 21. So what I do is I find the opening balance of that candle, I go to the closing balance, I figure out where exactly 50% of it is. It's right there, 0.5. There's my yellow point of interest line on the daily, 4,240. And what I can also determine is the point of control of that candle. It's right there. So I stretch that, also that point of control, into the future. When I'm done, I get rid of my fib, and I can see that this block, this point of control of this bearish candle, is below the all-time high supply. So we've got maybe a possible lower high in the market, maybe developing. You can see we have not transacted back in here. The buyers have not came and transacted in this block. So if they do come in today, tomorrow, or sometime this week, it's got to get through this zone in order to get to the all-time high. So it could come right here. Sellers could be bringing their offers down into this zone. Buyers are buying into it. It's coming up nice and strong, but there could be more sellers there pushing it right back down, and then that would be protecting the all-time high with a new lower high in the market. Okay, and you can clearly see we have not transacted in that zone, so it's still active, it's still pending in the market. There could be you could look in the depth of market right now and see how many pending orders are waiting up there. Okay, but we haven't came in there. Okay, the closest we came into was this wick, and this wick. Those were the most recent highs coming back in. So right there, 4,160 lower high. We still have not even came into here. They came up bullish right there, back down. Came in there again, lower high, back down. They came in there again, they pushed it down. Then we had this big bearish candle to start the week on Monday, October 27. Okay, so continuing to push down. What I would be looking at is, I would be like, these are nice indecision candles. You can see that there was some sideways consolidation, but this is a big bearish engulfing candle closing near the low. It looks like it's got nice clean volume compared to these other three candles. So that's another one that I would figure out where the open and the closing balance is. I would determine where 0.5 is of that big daily candle right there. And I can see now how we have bullish volume above 50% of that. So this is kind of like the double bottom breaking out of this resistance. I would determine where that bearish point of control is right there. I did this all last week, so it's not like we're just doing this right now. Stretching it into the future, I could see when we came in there, went back down, big bullish candle, kind of extended exactly. Look at where the wick is, right at that 50% of that candle. Then we had another leg come back down, but now we developed a nice little double bottom coming back in. So if I stretch this into the future, you can see we have a nice big bullish opening daily candle. It ignited, no wick to the low. Big strong bullish candle, breaking a high, breaking that high, and it's got a new high coming in here. So after today, this candle still has a lot of time on it, 10.5 hours to go. Will it eventually close above here? If it does, it closed above this zone, what I'm going to do is flip that red zone green and see if it continues to build off of this next week to get up to here. Maybe it gets rejected and we'll trade back in this zone. Maybe it will close below here. Then in fact, it will be still a red zone. But right now, it is a red zone. We are impulsively breaking through this right now, but there's still 10.5 hours to go. So what I do is, with that zone, stretch it into the future, get rid of my fibs, and now you can start to see a little bit, that's where the neckline is, okay? And we can now acknowledge the bottom we had right here. There's the most recent low, but look at where the bodies are. We've got a body here, a body here, a body here, and a body here. So let's place a yellow line at our bodies. And you can see we're holding good support at 3,928. That was the most recent low, but you see nothing closed below there. There's another wick. So it looks like there's good supporting level holding below there, okay? And there's the nice double bottom. There's the second leg with the bigger volume impulsively breaking through here, okay? So again, someone will ask me, well, what run? Why is this zone not green when when the volume is above? This is still a live candle. Nothing has closed above here. It could get a wick and come all the way right back down and be below here, and this will still represent sellers, and then it just shows me that it was an impulse move breaking out and coming right back in. I'll determine if I'm sitting on the daily, I'll wait for 10.5 hours, then I'll determine where the volume closes. But right now we're doing a top down, so that's an impulse breaking out of this area right here. So if we continue going up today, where could we go up to? It looks like it wants to transact where it was transacting in here for a couple days. Bearish, bullish, bearish before that big drop. So why don't we identify an area here? Why don't we go right up to there? Body, body, body. 4,125. That's a nice psychological number. We're at 4,080 right now. So it's about a $45 move away from here. That's about 450 pips. But with the volume we're having lately, it could possibly get up there, okay? If it doesn't get up to the top point, what about here, where we had a bearish body close, a bullish body open right here, okay? Let's acknowledge this area as well, right there. Okay, now it's 4,100, just below 4,100, 4,097. Maybe that could come in there and be resistance and push right back down, okay? So we've got some levels above us. We've got some levels below us. Okay, another level below us would be just right here. Where did today's daily candle start? So we can see Friday was very bullish, came up to here, got rejected, closed with bullish volume. Look at the transition over the weekend. There was Friday's close. There's our opening today. Look at it, exactly at 4,000. That's why we had this signal going into Friday's close right here, looking for buys above 4,001. And if you looked at that, you can see you are doing really well in the money. Some of you guys already hit your weekly goals. You guys messaged us. But look at now how we opened, okay? There's the opening price. Look at, there is a wick, so it's not technically an ignited daily candle, okay? You can see there's a little bit of a wick. But all that wick is the low of the day. That's the biggest drawdown today. It's basically nothing. You know, it's only $1, $2 away from the opening price. That is nothing with gold's volume. So it opened right there. There was a little bit of a pullback. Are we still above 50% of Friday's volume right here? You can cut it in half. Yes, we are. We're still above here, okay? And then you see, we had a big wick to fill on Friday, and we filled it today. It's filling. Came all the way back up. So we took out Friday's high, which is right there. If you want, you can extend the red zone to meet this yellow line if you like, you know, right there. And you can see we continued to push up. We got above this high on October 31st, Friday, Halloween. And we came right through here. So you see we penetrated right through that red point of control zone of this big bearish candle. And it is still pushing up. We have a high of the day so far. Remember, we still have 10.5 hours to go, so gold could completely continue to go higher and higher. But that's why we got to watch this yellow line at right under 4,100. We got to watch this yellow line at 4,125. Okay, right now it came up. That's the highest point of the day. There is a little tiny bit of a selling wick. Will it come all the way down? And then this is the area I would be watching, the top of the red zone, because this is where buyers could be now accumulating or positioning themselves to maybe purchase a pullback at 4,060. And then if you can't hold there, maybe we'll test 4,044, this yellow line, which was previous resistance right here of this candle. Could be support due to today's volume, and also it's representing 50% of this actual zone. If this can't hold and it comes down there, maybe we should see buyers step in here at 4,025 at this yellow line, where it was previous resistance on Friday, could be support today. And if it doesn't hold there, then sellers you could see would have a big wick on the candle and pushing it down. Then it would want to target the opening balance, and there's no wick to the bottom, so that's where they could flip a candle and turn it bullish, or bearish. But we have a really strong bullish candle. So for sellers to reject this, all of this volume, there's got to be some substantial news in the market to dictate that. Because right now, it's a really strong bullish daily candle, and it's still got some room to continue to drive to the upside, okay? So now what I do is, today's daily candle is very bullish. That's the bias of today's daily candle. I don't think anyone's going to tell me today's candle is bearish. You can tell me that this leg is bearish, but regarding today's daily candle, it's bullish, okay? It's like right at the highest point of the day, and look at all that volume. Now, let's dissect this daily candle and bring it into now 4 hours, okay? So now we can see the 4-hour moves. These are 4-hour candles. There was a nice big double top on the 4-hour, had that considerable drop, but you can see gold never broke down here on the 4-hour, came back up, kind of like a higher low double bottom. Couldn't break this. Remember that bearish point of control right there? 4-hour candles came in, pushed right back down. We came in again, back down, but we got higher low, and then we had the big bullish open, okay? So this is Sunday night open, 6 p.m., right when the candle opened. From 6 all the way till 10 p.m., closed strong, right above there. You can see that now it opened again. This is 10 to 2 p.m. Opened, continued to move. This candle right here is representing Europe. It's 2 to 6 a.m. So we can see it still opened up, still holding above here, higher low, continued. So I can see Europe made the highest point today, came back down and closed right here. Again, this 4-hour candle now is representing this session, 6 to 10 a.m. We still have 3 hours and 17 minutes to go before this 4-hour candle closes. It opened, brief pullback, but look at where it held. It held the body close, body open, still holding a wick. So I place a white line right here, okay? This is telling me that now on the hourly, we had a close. This is where Europe opened, and even the retest is still holding above this white line. So 4,075 is still holding 4-hour support, okay? It has not broke. In order to break, if this breaks, then maybe we're going to start to sell back down into here. But the 4 hours are still strong. So even it opened bearish, got a wick right there, coming right back up. So you can see that the 4-hour candle is building to maybe take out, again, today's daily high. Maybe it wants to drive up to just under 4,100 right there, that yellow line. If it wants to continue to move, we have this daily marker at 4,125. But what you could also do if you're a 4-hour trader, you could look above this purple line, yellow line to the left, and then you can see right there. See where the 4-hour had, it came down, came back up, and then that's where it had some resistance right there. You could place a white line right there. So if you're a 4-hour trader, you know exactly where your 4-hour resistance is. It's right there, 4,108, 9, or 10 right there. Okay, the yellow represent the bigger, higher time frame daily, but if you're an hourly trader, maybe 4-hour hourly, we'll identify this white line. Okay, so it's bullish as well on the 4 hours. Okay, we have one body on the 4-hour that actually closed above all of this structure. You see there was wicks, wick, wick, and a wick. There's a 4-hour body that actually closed above all of those wicks, and then we're continuing to move. So it is still bullish on this leg of the 4-hour, okay? But someone will say to me, Ron, well, it's still bearish over here. You're absolutely correct. So it could just come right up to here into resistance and go right back down. But when it's coming back down, then we'll come into blocks here. So regarding now 4 hours, remember this big red block? I couldn't change it green because the daily candle still has not closed. It's still moving. But I have a 4-hour candle that has confirmed that it's closed above this red block. So I can now change the color of this red block to green. So if I going into like New York and later today. So if it pulls back, if the 4-hour candle kind of sells back down, I could entertain a buy right there to go back up. I could entertain a buy right there, or I could entertain a buy if it comes all the way back down to the bottom of the green zone. The deeper it goes, the better the discount, the more the buyers, the stronger the zone. But it could come down and retest any one of these, and I could be buying with the daily candle, right? So you see how I made it green? Why? Because a 4-hour candle has confirmed to me it's closed above, but has not came down to retest any pending orders down here, okay? So let's now break it down further from the 4-hour down to the 1 hour, okay? Now we can see a little bit more how it's trading right now. So when was the big move? 6 p.m., right when we opened up Sunday night. Big bullish move, continuing close near the high, no pullback. I would be also cutting that candle in half on the hourly. We continue to move up. Close, again, no pullback into 50%, continue. You could have had a trailing stop loss and maximized on this move right now. Right there, 50% of this candle, we're still moving up. There was another big push at midnight, continuing to drive. There's 1 a.m., there's 2 a.m., here's London right now, 3 a.m. So right now you see the hourly candles are barcoding. See how we're going bullish, bearish, bullish. This was bearish, and now it's coming back up. So if you want to trap the 4-hour hourly candles, right there, you can see we are in a flag. Okay, it's a bullish flag following this hourly rally. So a bull flag has a high probability of continuing to move to the upside. So we still have to come back up and retest the highest point of the day. If it breaks out a little further, we could break up to that yellow line. However, there's got to be something from the purple to the yellow line for scalpers. Okay, so what I do is I look to the left of the chart. From the purple to the yellow line, let's go backwards. Let's see the last time gold traded in here on the hourly. Here it is. I can see the exact date and times now. So I can see when we pushed right below here, it was Friday, October 24. I can see Friday, October 24, Wall Street, 9 a.m. We came right back through here. I can see Sunday, 6 p.m. when the market opened up, it was bearish. I can see also we had a retest Sunday, came right in there, looking right to that yellow line, and then they rejected it back down. So if I'm looking for some, like there's right in the middle, there's an hourly body close, hourly body open. There's a wick right there. There's bodies of bodies and a wick right there. So me as a scalper, if I was to place maybe like a 5-minute cut line right through here from the purple to the yellow line, I would place it right there, right there. Can see a little bit above, a little bit below. Got a retest right there. There was an hourly body close, hourly body open. This is when a big hourly body came right into that red line, back down. This is when it kind of cut right through there. So if I'm scalping from 86 to 91, that's a $5 move. I know if we break today's daily high purple line, it can move up 50 pips to there. There could be resistance right there, trying to protect that daily point of interest, right? If it breaks through the red line, then we've got a high probability we're going to tag into that yellow line. I could do the same thing from this yellow zone to that hourly zone right here. I can see that there's body, 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 a wick. I can see that there's a wick, wick, wick. So even if I wanted to cut this right there, cut it at 102, again, it's a 50 pip zone. That's what I look for when I'm scalping the markets, okay? So you can see right now where that red line is, right there. There's the cut line. So we still have a long way to get up there, but what we got to watch for is we're not getting back up to that daily high, okay? It's coming up right there. It went back down. It came all the way back down. It reversed back up, but we're still not at that daily high. So we still are consolidating in here. It is in a bull flag consolidation. It can continue to go, but we could also, reverse this move coming back down. So if we get hourly volume like a bearish candle, it's already done some damage down there, but no black candle is closed below. So if we get an hourly candle come back down, black, 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 close below there, maybe we'll come retest this zone. We flip it red. Then we got selling pressure to come down, not to crash the market unless there's news, but to come down and test this right here. And if it tests there, could retest this and go back up. However, if this can't hold, we're going to retest this. That's probably a better zone right in the middle. That's where we could see it come back up. Then if it comes back in here, that could be, a zone that could push it right back down, right? So that's what we got to watch for is right now we got buyers and sellers accumulating in here. Could continue to break out. If we're trading with the trend, we should be looking for continuation buys. However, if the sellers close it below here, it could signal a leg coming down. That we can see that the overall hourly is overbought up here on the RSI, but again, it could just cool off and continue to drive, okay? Doesn't just because it's overbought doesn't mean it's got to sell. You can see it tried to, but no closing volume below. So it's still very strong. It's overbought. It's in an area of strength that can continue to drive and squeeze shorts, okay? That's how it looks on the hourly. So we did daily, 4-hour, hourly. finally, let's break it down into these 5-minute candles. So you can see the 5-minute candles when they kind of opened up at 6 p.m. You can go back and look at it right there. There's the opening of the day, Sunday, right there, 6 p.m. You see how it just opened? That little tiny wick is representing the lowest point of the day. Then it just went up, pulled back, new high, kind of consolidated in here, came back up pre-London, 2 a.m., kind of consolidated in there, back down, didn't really break, had the big push right here, and we're continuing to drive through here. Okay, so it's still moving up. You can see we're in a bull flag on the 5 minutes. Wow, look at the hidden divergence on the 5 minutes, okay? I'm not a real fan of RSI, but in situations like this, let's look at this. Okay, see how the price is moving up, came up, back down, higher low, new higher high, and it's still consolidating in here. Look at the strength on this RSI. What do you see? You see it right up here. It kind of was really overbought right up here, and since then, look at the kind of the strength. It's been going down. It's been going down. It's been going down. And look at the price. The price hasn't really shown us selling pressure. So it's still going up. So this is bearish hidden divergence. It could be signaling that it could possibly sell off, but it has not. Okay. So you got to wait for confirmations, like for 5-minute volume to physically maybe close below this green zone. You see, we haven't had a 5-minute candle close below here. We've had a couple that have, impulsively broke down, but kind of faked out the market back up. So if we get a closing bearish candles below here, we could then start to see maybe a little bit of a redistribution. But again, not maybe just a whole, unless there's news to bring it down. Maybe if it comes down, we test right here, because it could go right back up, right? And if it comes back up, maybe we'll go down lower and then break this and come down there. So we go down to each one of these points of interest, here, 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 and then we can figure out the distance. So if we're looking for sells from here to the yellow line, I measure it. It looks like it's a $15 move in gold. That's 150 pips. That could be more than my daily goal. Sometimes my daily goal is I'm just looking for 50 pips. Okay, but again, that's the entire zone on the higher time frames. Again, what I can do is I can see from the white line to the yellow line, I can see exactly how the 5-minute candles have been trading in here. See where there was a lot of consolidation, kind of like right there? That's what I could be targeting in my sell. If I just come right down in there, that's it. That's 75 pips right down to there. There on the 5 minutes was support. What if it breaks down later today and just comes right down there? I'm up 75 pips. I have to respect this, because buyers were there. What if it just comes down there and goes right back up? I'm up 75 pips. I don't want to piss that away. I kind of want to do something. If it breaks down, if this is higher time frame sell, then it will break that red line and maybe physically come down to there. But there could be a little pause in the market right there. If you can look back and see where that pause was. It was a little bit of a consolidated flag there, right there on the 5 minutes. Okay, so if it comes into that zone again on the 5 minutes, it could be support there, right? And then that's all that the sell is. It's just like a little cool off and continue to drive. So we have to really watch that, okay? But right now, like inside the zone, sorry, I just want to get rid of this. Okay, so what we can do now is we can see what the 5 minutes are doing. Is there a little bit of 5-minute resistance right now? There is. You see right there? That big bearish engulfing candle, if we cut it in half, you can see we came in there again, back down. We just came in there again, back down. So you can see we're having a little bit of resistance at the highest point of the day right there. There's the purple line. So 5 minutes are pushing right back down, okay? So we can trade this if you like. However, what we can do is we can wait to see, are they going to do something at the highest point of the day? Are they going to come up here, maybe take out some liquidity, then come back down and drop it? Or are we going to maybe make our way back up to that daily high and close above there? Like, will it come back up and close above, maybe retest this or this, and then we could continue to buy up to there? If you want to entertain some trading inside here, you can, but it's maybe not the best zone. I can see it's just coming down, going back up, 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 maybe possibly coming right back down, but right now I can see there's a wick, and a wick. So right now, the volume is really kind of consolidated right in here, okay? So we can continue to watch gold for a little bit. We're almost going into 7 a.m. in the next 5 minutes. Let's add our daily bar indicator right beside us, so we know what the daily bar looks like. It's really bullish. Okay, look at this thing. It's all the way open. Remember, open down here at 4,000. Tiny drawdown on the lowest point. And look at how bullish it is. There it is, where we just hit the highest point of the day. So all of this little 5-minute selling is representing the wick of today's daily candle, okay? So it's still very bullish, right? So maybe we just continue to look for buys. The only sell that I will maybe entertain is if we can close below this zone. That might dictate a further push down, okay? Otherwise, we just maybe continue to buy and hope that we continue to break new highs and continue to move up, okay? And then if we add some EMAs, I know you guys like the 9 EMA. We're right at the 9 EMA. And then the 200 EMA, you can see where the 200 is. It's all the way down into here, okay? So you can see how far away the price action has diverged away from this 200 EMA, okay? And then we'll watch going into 7 a.m. Okay, any questions on gold? If you guys understood the top-down analysis, hit the like button. Subscribe to the channel, guys. We have over 300 viewers. Thank you, guys. Hit the subscribe. We're going to do a top-down analysis on NASDAQ and US30 also. Is anybody in a trade right now? Okay, I'm not in a trade right now. I'm going to wait till 7 a.m. to see what's happening here. I'm just checking my spreads on gold. And these are not the greatest candles to be trading. These last few 5-minute ones, you can see there's a lot of indecision, coming down, going back up, coming down, going back up. This one came up, back down, closed right in the middle. This one was bearish, coming right back up. So not the greatest. Okay, even if you wanted to kind of consolidate this area, trap this area, you could just make it kind of neutral like this. And this is what we're watching right here. And we have to also acknowledge we're right near the highest point of the day too. Trev, have I ever thought of doing BTC live? Yeah, I can do that, no problem. But as long as everyone has good spreads, okay? Okay, so we have 1 more minute and 10 seconds before this 5-minute candle will close. And also it's very important because it's going to close our hourly and open a new hourly. So what we can do is, again, look at the hourly. Hourly is bullish. It's a bullish hammer. So you can see we opened right here. It came down during this hour, but look, it picked up that wick, still didn't break, came back up to the opening balance of this hour and pushed right up here, okay? So it may close above here and we might have another bullish hourly open. Could open ignited right near the high to test that highest point of the day. So we have a really nice bullish hourly hammer, okay, which is going to close in 30 seconds, okay? So when we look at the 5 minutes, this is now representing the closing of this hourly bullish hammer. And we have a 5-minute push too, okay? So we're not too far off. Right there is the daily high. Still moving bullish. So those sellers got caught there. You know, I don't blame them for selling, but you know, you still got to acknowledge that this is still a bullish run. Okay, Sellers are not really closing it below anything to justify it. Look at now. Here's the close, okay? So look at this thing. This could look at this red line is now representing exactly 50%. The cut candle, which was resistance, now support. Look at it closed right near the high. Here's your ignited continuation. There's where it just opened. So let's see if it can break the purple line right there and see if we can make a new daily high. Okay, so far it didn't. They rejected it back down. It's now that shooting star candle coming down. Let's see if it will retest exactly the red line, 50%. Maybe catch a wick, maybe start to consolidate up here in order to take out that daily high. And you can see the RSI, it did have that hidden divergence, but still it's moving strong. It could make its way right back up to 70 and above and gain strength and continue to go and maybe possibly continue to squeeze short sellers that are trying to sell the highest point of the day. And this thing could continue to push to the upside, okay? So it came down, came back. Again, look at it. It's right near the opening balance. It's a spin top candle, still gaining some bullish volume. Okay, I'm going to buy this candle to see if it can continue with the momentum to break out for a new daily high. Okay, my stop loss, where I'm going to place it, I'm in a buy. I'm going to continue to buy with this candle with the new hourly. I'm going to place my stop loss just below that, the body. I'm going to place it just below the red line. Okay, see the red line has came down, respected it. My stop is just below it. Okay, so I'm in a buy to see if we can push up, maybe to, you know, I would like to get that red line up there. Remember, we targeted that red line, but let's see. Okay, that's 25 pips right to there, just on an impulse breakout at 7 a.m. So 25 pips. Beautiful move. I had a 0.4 spread on this. That's why I took it. And then we got to watch for if we can get closing volume above the purple line. Maybe we can build off of this, maybe flag up here again to ideally get up to that red line of 4,090. Okay. I haven't adjusted my stop loss to a break even yet or anything. It's just right below here, right below that red line. If it pushes more than 30 pips, I will definitely start to reduce my risk in the trade. So this is kind of the continuation into the new hourly candle. 2 minutes to go to close this first 5 minutes of this hourly candle. I would like to see the blue volume if it can close above the purple line. Otherwise, this will be kind of like an impulse breakout, creating a new high and getting rejected down. So I want to see that volume continue to close above the purple line and build off of it. And we have 90 seconds to go into the close. Okay, so it got rejected. Volume is back below that purple line. We still have the bullish volume. So let's see. It's going to be a battle to see where it can close. One more minute to go. So the last 30 seconds will really dictate who has momentum going into the close. So far near the end of this candle, sellers have the momentum. It was initially buyers pushing it all the way up, but it's a 5-minute candle. So sellers have been pushing it down, but final candle will close in 37 seconds. Okay, so it's right back to my break, basically where I entered. I'm not at a break even, but it's, you know, I was up 25 pips, came back down to where I entered. So let's see what happens now going into the close. I didn't take out some profit, no. I was looking to, you know, target this red line up here. Okay, so now it's back to the opening balance. Let's see if it can hold a little bit of opening volume. Maybe continue with the next candle. However, if it comes down, maybe we got to retest this and see. So it closed as a spin top candle, okay? And then the next one just opened bearish, ignited, pushing down, okay? So it's got a wick. It has a huge wick to fill. It's not one of those small ones. So even if buyers are asking to trade back at the highest point of the day, still have a big uphill battle to fill that wick and come back up there. So it was a pretty large rejection at the daily high. So that signals that there's a lot of sellers. So they could be positioning themselves again here to continue to push this thing down. So my stop loss is just below this red line right here, because I don't want to see a big black candle just dump down in here. So that's where I'm going to mitigate my risk in this. See if it can continue to build, come up there. But if it comes down, I don't want to be in this buy anymore, because then it's got a massive rejection at the daily high and could start to see some selling volume cut right through here, okay? So I'm still in this, close to where I entered, but it's got some significant selling pressure. So let's see if those buyers can continue with this higher low, bringing it back up. And if I'm still in this, I'd like to see if the buyers can close it with volume again above that purple line and maybe continue to build it to fill that wick and continue to drive up to my red line, okay? So far the buyers are still here. They didn't kind of get scared by that big rejection wick. But this is one of those big wicks to fill. So they are coming back up, right? But you see where the fight of closing volume will be at that purple line. So this is a great response by the buyers. And if we can fill up to there, I'd like to see a new higher high breaking out for approximately maybe 30 pips. I don't want to see an equal high or a lower high, because then we're going to push down. But we still have a nice backfilling volume coming right back through here, okay? It's a really nice push by the buyers. They kind of didn't get intimidated by that big rejection. There we go. We got a new high breaking out. Okay, so that's approximately almost 30 pips, 20, 27, 28 up to the high. I'm looking for 30 or more, and then I'm going to start going to reduce my risk. It could either be a break even or just 5 points below a break even. Okay, so we're still holding good support here at that red line. Okay, we've got a new daily high. Perfect. But let's see if we can close with volume 2 above here, because then what we'll do is if it's a nice bullish candle like this, we'll cut it in half. We'll find the point of control of this candle. Maybe we can build one more push to get up to, that's my target, is the red line. If we can get up there to 4,092.91, and then up there would be approximately 60 pips. You guys can manage your own risk, please, guys, too. That's 30 pips up there. And then we got to watch going into the close, 90 seconds. So if we can close above this previous high, close near the high, we could make this momentarily, this resistance of that rejection wick to support. We can open ignited, or if it's just a quick little open and a quick wick and drive, we could do it, because this is hourly momentum. If you look at the hourly candle, this is the push, like an impulse on the hourly. So let's see if we can kind of get a little higher. We're trading at the highest point of the day. Sellers are selling, but they could get squeezed a little higher. That's what I'm looking for, a nice little just short squeeze, and grab some pips and get out of here. But there's the rejection. Now we got to follow the closing volume. Oh man, this is going to be a battle right here, right at this purple line, with the last 40 seconds to go. But we've created higher lows, higher high, higher low, higher high, a higher low, a new higher high. So we are continuing to push. Now we just got to follow where the volume closes. We have not had a 5-minute bar close above this purple line today, okay? You can see. So this one is a very significant volume candle to close. Man, what a battle it's going to be in the last 15 seconds. So sellers are pushing it down right into the close. Where will it close? How will it close? Here's the close in 5 seconds. Here we go. Buyers coming right in right at the end. Closed it with some bullish volume. Okay, so we still have those upper wicks, but if it needs to come back down and retest, we might be retesting the purple line as support going forward. Now we have confirmed volume closing. It opened bullish. It is an ignited candle, so can it continue to fuel itself up to fill these backfill these wicks and continue to break out? It already got rejected, so it's a lower high, so it could come down, but maybe we can gain some support if it pulls back in the point of control of that volume right by the purple line if we can't get that push right now, okay? So it's still fueling itself. It still has not broke its opening balance. We're still holding strong. Okay, so let's see if we can just continue to fill and break out of here. Then we can get back up to our 30 pips and maybe break out to 35, 40, right? Just looking for maybe another breakout up to there. So you see it's holding its ignited open so far. But again, you guys should know about equal highs, and if it's a lower high, we're struggling to break up there right now. Yeah, if you guys take out 50%, that's great. Like, you guys can go to a break even, you guys can scale out. Remember, you guys should be managing your own account. Okay, so this candle is still holding its bullish open for 90 seconds so far. Okay, but there's selling pressure. We didn't break for that high. Okay, so you can see we've got a wick, and a wick. So if we lose our opening balance, this blue candle, then it's technically going to turn into a shooting star, possibly push down, but then we're going to retest the purple line. That's where I'd like to see buyers step in again. Okay. Man, I'd like to get into that 4,090 area. Just that psychological block to just trade in there, that would be nice. Notice how the candle has not broke yet, right? It's still holding the blue volume, okay? So it's still, every time it comes down, it's refueling itself at the opening balance. That's good. Has not broke yet. It's been 3 minutes now where it's been holding like this. So all we need is a couple buyers to just ask to trade at 4,089, create a new high. Maybe that will get us to where we got to go. But if it needs to pull back, at least we may have some support coming down into here, but it's still holding that bullish volume. Okay, see how it's just a really tight candle, still holding in here, hasn't really broke its low. So buyers are still asking to trade up here. It's coming back up with 90 seconds to go. So let's see if we can just ask a little higher and break out of here for that new higher high. Maybe grab ourselves 30, 35, 40 pips, then take stop loss and start reducing risk in the trade. That's what I'm going to be doing. Okay, so we're coming right back up. I want to see that break of that high now. I don't want to see equal highs or they just, put it right now. I want to see it break. It's got the volume. It's got the strong opening balance still, so we got the break. So now maybe we just drive a little higher for a new higher high. Maybe close strong. Okay, again, we're at 30 pips so far. Okay, so there's, again, we produced a new high. It's a tiny bit, but we need to continue to create higher highs in order to move higher. We've got the higher low support below us. The candle's going to close now in 37 seconds. One more squeeze out of here. One more squeeze. It's not too much to ask for. Let's just squeeze one more push out of here. Squeeze some more short sellers. Make them think about their decision of selling the highest point of the day. And just squeeze a little higher. Okay, and here's the close. So look, we're closing right near, okay, new higher high, there's the push. Close right at the high with no wick. Oh my goodness, okay? That we could get a nice little ignited pop. We didn't get it, okay? So, but we moved 40 pips, okay? So what I'm doing is now I'm gonna go to a break even on the trade. I'm up 40 pips. I'm going to a break even, okay? Up 40 pips, break even. No risk in the trade. Worst case scenario is it comes down and hits me at a break even. But one more, if I can get one more push out of here, I'm going to be taking out some profit. So right now it's coming to retest about 50% of that bullish candle that we just had. There's the wick right now. So let's see if it can continue to build at this wick right there where I just cut it in half. Let's see if it can continue to hold. If it can't hold 50%, it's going to come down to the opening balance of this candle. And then we'll see if the opening balance of this candle will still hold support. But right now we're still holding support at 50%, okay? So let's see if we can just drive up one more time, flip this black candle back to blue, turn it into a bullish pin bar hammer, and maybe break out of here. But we've got some strong selling pressure that's pushing down now, okay? So I want to mitigate my risk, so I'm at a break even, okay? So I have no capital at risk, just profit. There's the beautiful, came down, we turned into a bullish pin bar and a hammer, driving now 40. If it can get up to that red line, that's where my target is, would be approximately 50 to 60 pips up there, okay? And it's a beautiful hammer candle. See how it came down, higher low. It didn't hold exactly at 50%. That's that, you know, the zone. I didn't do my Fibonacci there to get a little bit above or a little bit below that red line, but still holding, okay? You guys are welcome to take some profit out, but hopefully all of you guys have reduced your risk to break even, okay? Hit the likes in YouTube. Subscribe to the channel if you like what we do here. We do appreciate it. We're taking a buy on gold at the highest point of the day. Pretty crazy stuff. There we go. Okay, I'm going to take out 80%. Boom, right there. I'm taking out 80%. We came right through exactly what I wanted. That's it. 80% out and 20% running. Holy, I got filled to the upside when I got out because it pushed. So I actually got filled to 65 pips. Amazing. And now you see the big rejection wick? That's why I target that red line. So I have 20% running still at break even. If it wants to continue to go, fantastic. But the bulk of the trade I take out right there. And then I don't worry about what could have happened, what should have happened, if this goes higher, if it goes lower, what happened, nothing. I trade from this point to that point. That's called an imbalance fill, scalping the markets. Okay? That's what helps me get in and out of the markets, is following from this destination to that destination. And then what continues is my runner. If it wants to continue to go, beautiful. That's why I have 20% still invested. But the bulk of the trade, I take out right there. Because that was a pretty significant rejection wick if you guys saw it. So this could come tumbling right back down, but thankfully there's buyers still supporting this move, okay? So that pushed up to 70 plus pips. TP for my runner is this yellow line, okay? So the 20, if I can get up to the yellow line, because that's a daily point of interest. So if my runner can get all the way up there, I'll be closing the remaining 20% at that yellow line, okay? And then if the runner can get up there, that would turn into about a 110 pip move. Okay, and then now let's follow it, okay? The volume broke through there, created that new higher high. Let's follow the volume. Will it close now? Look at where it's trading, right at that red line. Will it continue to close above that resistance, make this support and go further, one more leg? But, you know, we could see a leg coming back down, but we're still holding good, strong support. Good move. Holy shit. Good backfill on gold. What is my lot size? Deku, it's enough where this trade I made my daily goal. That's the lot size I use. Where I can go right now and eat some pancakes for breakfast. Holy, this thing is moving. Wow. Okay, so let's follow the close now in 9 seconds. Okay, so it did close above. So see the red line is still there. What I do is just maybe drag the red line to 50% of that big bullish candle. See, again, we opened strong, ignited, could continue to fill. If it needs to come back down, we'll retest this red line, okay? But look, it's nice bullish open still popping, okay? Guys, that would be a real big target, that yellow line, okay? Because that's a daily point of interest. That's about 75 pips now, okay? But you guys, please manage your own trade, okay? I can't tell you when to take out profit, guys. I'm helping you guys with entries and managing the risk below, okay? To get us to break even, that's my job. With profit, everyone looks at profit different than others, okay? So, but on an 80 pip trade, guys, with minimal drawdown. We didn't have too much drawdown. That's 85 pips up to that candle right there, okay? So remember, but the final target would be that yellow line. That would be the hourly filling up to that daily position right there, okay? So you see, guys, we took the advance on this new hourly candle. The previous one, 6 a.m., closed right near the high, small pullback. That's why I decided to buy at the highest point of the day, and we squeezed for 85 pips. Right now, look at it, still going. Look at this. Holy shit, guys. Wow. Okay, so we're not too far off. My goodness. That's 95. Sometimes when it hits 100, I'm a psychological trader. If the trade hits 100 pips, you could get out. Okay, I don't need to get greedy for 10 more pips. It's already hit a target on my mobile, okay, where it's trading at. I think trading view is a little slow here. But that's 95 pips, okay? So, you know, 100 pip trade is someone's daily goal. And we got 2.5 minutes to go on this candle. So you see, a lot of them are opening bullish strong at the opening balance. Guys, hit the likes on YouTube. 350 viewers. Subscribe to this channel, because you'll learn and you'll earn, okay? Just with a subscribe. It costs you nothing. I guarantee you'll learn something new every single day. And you might even earn some pips too. What have you guys done in this trade? What have you guys done to manage your risk? Okay. I'm not worried about what you guys have done with your profit. I'm asking you guys, what have you guys done to manage your risk? We just did a 2-day boot camp on risk management this weekend. Each day, Saturday and Sunday, was 4.5 hours long. And we were stressing the importance of risk management. So what have you guys done to manage your risk? Jitendra, you took the breakout trade break even for me. Okay, so you have no capital at risk. You're at a break even. That's good. That's managing your risk. What have I done to manage my risk? When it broke out there, I took my stop loss. I had a really rather tight stop, put it to break even, and then as we moved to the red line and broke out of there, I took 80% out, so I still have 20% running. My target is the yellow line to close the entire 20% out, or if it gets a little higher, to 100 pips total. And then I'll be out of this trade completely. And then that's to a target, to a yellow daily point of interest. So right now I'm just kind of playing with my 20% remaining profit, but it's good profit. I still don't want to gamble with this money, but I just want to see next. Here we go. Here's the 10-second close. We're near the high. So just one more technical push right to that yellow line would be perfect. However, if we do need to pull back, let's bring our cut line right to represent 50% of this volume. There's the close, okay? A little bit of a wick. We open strong again. One more strong open. If we can just fill that wick, we could technically get our 100 pips and maybe really close or even hit that daily point of interest. Then I will be closing my entire rest remaining out of the trade, okay? You guys could have a trailing stop loss if you guys like. That's up to you. But this is my daily goal, guys. I want to be done trading, right? If I can be done trading by 7:30 a.m. Eastern every single day and go eat pancakes and have a coffee and go relax, I would love that. Okay, so you see what I just did there? I just cut that blue candle in half. That's the point of control of that volume. So when it comes down, I'd like to see if it can catch some buyers and go back up and continue come back to the opening balance and fill the wick and continue to drive. Maybe we'll get some flag, a consolidation. Remember the RSI? Look at now the RSI is starting to get overbought again. Remember that hidden bearish divergence? You see how nothing broke down with that bearish divergence? That's why sometimes looking at these technical indicators give false signals. I just go with my top-down analysis and the overall trend of the market was telling me to buy. Someone will say, Ron, you were crazy buying the highest point of the day while there was bearish divergence, but tell me if that move right there is crazy now going up 100 pips. So it's not crazy, but if you follow this type of indicator, you might get a lot of false signals. Right now I can still see we are overbought. We're in an area of strength. It could continue to squeeze, but then that's why I have that yellow line marker. That's a daily point of interest. That's more where daily sellers might be positioning themselves as opposed to just some 5-minute selling. So this is more of a higher time frame. So that's why I really respect that yellow line right up there. So you still see how we're still holding above the red line, above 50%. Now we're building back up our candle. It was building blue, then they just rejected it down. So this might end the momentum, our bullish rally right now. It might need to come back down, find some support to go back up. However, it could be one leg come up and then an elevator coming down. That's why I don't want to leave too much profit on the table because it could definitely just come right back down, right? And you don't want to give away 50, 60, 70, 80, 90, 100 pips to the market. Do I eat only pancakes? Yes. Yes. That's all I eat. Pancake diet. Okay, so you see we didn't hold at 50%. We have a big bearish engulfing candle coming down. We couldn't create a new high. A lot of the selling pressure is right near that yellow line. Now it's coming back down. Okay, so this is a big candle coming down. Back to maybe 50% of this big bullish candle. However, it's got a wick. We're closing in a minute 42. So we'll come back up. We'll see where it will close. Is this where we're going to flag right now? Like right inside here. You can see it takes two bodies to understand where the volume is consolidating. Could be right there. See, that was a big bearish candle that came down, but got a big wick rejecting back up. The volume is, look, right above that red line again. So where will it close? Will it close right here? Will it come back to the opening balance? Will it flip back up blue and one more drive? Or are these sellers going to come back down and close it below here in this consolidated range? So we're still moving up. Okay, that was good wick return. We have 60 seconds to go into the close of the candle. Guys, do you have any questions about that trade? Is it pretty straightforward what we did? Are you confused about something? This is the time to ask when we're live. This is not back testing. This is a live environment. This is a real live trade. It's working out pretty well, but let's see where it will close. Okay, so you see it's coming right back up, but it's this pin bar candle. Let's see the close in 20 seconds. Okay, so here's the close. So you see it's still closed above the red line. We just opened again, ignited bullish. See when it just came up blue and but got rejected. Lower high, lower high, lower high. So there's a 3-bar resistance at those wicks. So you can see if I just draw like a line showing you right there, we're struggling to break above here, but we're maybe in another bull flag right here, a minor bull flag that could continue to consolidate and break out of here. But right now we do have sellers in the market here pushing it down right below this daily point of interest, okay? But we're still consolidating in a bull flag. We still have volume above 50% of that point of control of that big bullish candle. Yes, that candle came down, but it returned right back up and closed right there. We had this candle that opened bullish, came up, but then came back down. Now we're coming right back up. So this is all I want, is just this one bullish breakout to get above those wicks. Then I know it's above 100 pip trade, and we're targeting that daily point of interest. Then the rest, remaining 20% of my trade, I'm going to close out. That's all I'm looking for. Then it met my requirements perfectly. You know, when you trade from one point A to destination B, it's like filling this entire zone from the daily high to that next daily point of interest. That would be a 100 to 110 pip fill. We filled that entire imbalance up to there. What else do you want in a scalp buy? I know some of you guys want 200, 300 pips. I want that too, but I trade to a destination. That keeps me disciplined every single day. So you see how we created that nice little bull flag? Nothing broke down. Okay, we created a new higher high now. Now we just got to kind of follow with that volume. 3 more minutes to go on this candle. Okay, so on my broker, that's 100 pips. Okay, where I tapped in to 100 pips right up there. Okay, I know TradingView is a little bit different, but that is to 4,095, close to 4,096. That's 100 pips from entry. Anytime anything hits 100 pips, it's a beautiful psychological number. Do something. You know that meme where it kind of pokes you and says, do something? Is there a sell entry possible from here? Yeah. Yeah, you're selling. Look, you can sell with those wicks. You're selling at this point of interest. You're selling where a buyer like me is looking to exit. So, you know, that could signal selling pressure. But I would wait for more confirmation. I would wait for a bearish black bar to close below. Because if you start selling right now, buyers could still push up. So if you're considering a sell, I would go really small, a feeler sell, until you get confirmations. Otherwise, I would wait to see what happens at the break of this point of interest of this yellow line. That's where the real sellers will step in. Okay, guys, that's perfect for me. I'm closing out my entire trade up there. The rest of the 20% is out at 4,096. That is now a total of 100 pips on that 20% runner, and I am completely out of this trade. All profit, okay? It met my target. I know I want to hold this thing longer because I'm on YouTube and I love you guys, but I got to eat pancakes. I got to do my job as a trader. That's more than enough for me. Usually I'm scalping just this candle and that candle for 20 or 30 pips. Very rarely are you going to see me hold 100 pip trades. That's more than enough for a 1 to 5 minute scalper. If you're looking to swing this, I hope it continues to run for you. But entire trade is closed right there, 100 pips. But let's watch the close, because I really want to see what will happen at this daily point of interest. You see how this bull flag is still intact and wants to drive up? So I'm off now? No, I'm not off now. No. I would be off now if I wasn't streaming with you guys. We're going till 10 a.m. We still have another 2.5 hours to go. We still got to do a top down on NASDAQ and US30 and get ready for Wall Street. We still haven't even came into COMEX. Maybe COMEX is when they're going to reverse this volume down, okay? Okay, now what happened? It closed above, okay, so it's still, you know, holding right here. It's kind of like this doji candle that just opened, and it's still holding the bullish open. There it's filling the wick and could continue to tap into that yellow line. Wow. So that's why do not be selling until you get maybe a closing bar below here, or you see something happen at this yellow line. So that's the daily point of interest. 4,097. Guys, hit the likes on YouTube. Put a W in the chat. That's a 100 pip trade, okay? Cost you nothing. It costs you a like. What's the best level for a trailing stop loss? I would be like right above this wick right here. If you have a trailing stop loss from entry, I would trail it right now 4,092, so that all of this is secured. So you got about 60 pips secured, and I would be running a trailing stop loss at right here, 4,092. If you really want to go, you know, secure more, I would secure it right there, 4,093.50 cents, because right in between this block right here. If you want to have a trailing stop, right there, trail it, and you're up 75 pips with a trailing stop. That's what I would do if I was still in this and I was trailing this. Right there, I would trail it up to there, because then if it comes down bearish, yeah, you're gonna get taken out. You still bank 75 pips, but if it breaks right there, that could cause the selling pressure to come all the way back down. So that's where I would technically have it, because you can see now it's getting rejected and coming right back down. So now we got some strong selling pressure coming down right there. That's where I would get stopped out on my trailing stop loss if I was in it, because this is a big bearish engulfing candle. It could close below here and start signal another leg coming down. So that's where I would be very careful right there. Okay, guys, do you guys mind if I do a top down on US 30, so we can get that out of the way, and then we're coming close to 8 a.m., and then we can revisit gold during COMEX, and then after COMEX we'll do NASDAQ top down, and then we'll get ready for Wall Street, okay? Guys, I trust that you guys now can manage this trade. All of you guys should technically be at a break even. Some of you guys are running trailing stop losses. Some of you guys have secured a little bit. But look at that, came right back down. See, that's why I said keep your trailing stop loss kind of, and you're still live. See how it came down above the red line, coming back up, hammer candle. So I just want to watch this just to see if it can tap into that yellow line. This is just for me, just to know that it confirmed that point of interest. So I'm going to stick with this just to see the close of this candle. I need to know this for my own confirmations, just to know how gold is trading, if it's respecting my points of interest here. What is the price of the yellow line? 4,097. Okay, but give or take, you know, a little bit here and there. And guys, the reason why I have this yellow line is on the daily. Let's go look at the daily now. Okay, this is the candle we just bought, this huge daily candle, right? So look at what the yellow line is. The yellow line is right here. See here, the body of this candle, Wednesday, October 22. The body of this candle, Thursday, October 23. You see how there's nothing? It's just like this black candle, but there was those bodies right there. That's where I have it positioned, right there, okay? Because that used to be support. It could be resistance, and that's why I really want to respect that yellow line. So it's right by 4,097, okay? And then if it breaks through this yellow line later today, you're targeting, remember that white line? That was from a 4-hour, when we were on the 4-hour hourly. 4,109 would be your next bigger target. Another 100 pips from that yellow line to get to that white line. And then this is what it looks like on the 5 minutes. Why do I trade on the 5 minutes? Why not? Why not? We just made 100 pips on the 5 minutes. Why not? That's the question. Why not? If you know how to trade the 5 minutes, why not? I even trade the 1 minutes. Why not? When you know what you're doing, the question is why not? Why do I have to answer that? Like, for why? I can ask you, why do you trade on the 1 hour? Why do you trade on the 4 hour? Why do you trade on the daily? Why? Because it fits my trading style. It fits. I like to get into scalp and get out of here. I told you guys, finish trading by 1 hour, 90 minutes, hit my daily goal, and go on with my day. I don't want to sit and stare at charts all day. If you don't like the 5 minutes, don't trade the 5 minutes. I tell you guys every single day. All candlesticks have the same characteristics, right? So you pick the time frame for what's best for you. If you're a 30-minute trader, okay, here's your big 30-minute candle. It was an impulse break. Now you're waiting as a 30-minute trader for maybe a pullback back down to here or here. Us as 5-minute traders, we got in right away, right here, okay? But everyone has their own particular time frames, okay? I'm not here to judge you or tell you what's the best time frame. It's whatever fits your personality, whatever you want to do, okay? A lot of people have busy lifestyles. They have 2 hours to devote to the markets, so they want to learn how to scalp the markets. Not everyone can sit at a computer and watch for 8 hours a day to swing trade. But regardless, okay, I'm going to move over now. I don't want to waste too much time. But someone just let me know. Maybe I'm going to just place an alert at that yellow line. I just got to know for myself if it hits that yellow line or not. Okay, so I'm going to move over now. So we did a top-down analysis on gold. We are still 40 minutes away from COMEX. So, you know, we got a nice little trade. COMEX, or before COMEX, could reverse this all the way back down. So I wouldn't be surprised if it sold all the way back down to where we entered. Okay, that's why you want to lock in some profit, guys, because it could come all the way back down. It could come into here and go back up. But I don't think you want to give back 100 pips to the market. Okay, so I'm going to move over now. I'm going to do US 30 top down, right? We're going to bring it down from the top to the down, just like we did gold. If you want to learn how to do this, this is how you're going to learn how to do this. This is where you're going to learn where my yellow lines come from and things like that, okay? So this is how US 30 looks on the 5 minutes, okay? I'm interested on the 5 minutes. I'm going to trade the 5 minutes, but right now, I don't know how US 30 was trading last week, this, that. I don't know, okay? So we got to start off on the daily. Now I can see a little bit daily structure, okay? It's in an uptrend. It took out this double top all-time high previously. This was December last year. This was February this year. Right there, there's a zone, double top. There's the drop. Stretch it into the future. You can see we traded in here a fourth time, and they pushed it right back down. Finally, there was a bullish candle that closed above. That was a particular day, a strong day that closed. That was August 22, Friday. That was Powell at the Jackson Hole Symposium Day 2 conference when he was hinting that the market is going to start reducing the interest rates down. And you can see the rally that the market had since then. So that was the first bullish candle that closed above, as if this is a 5-minute candle. Same thing I would be doing. Closed above, I make it green, and then you can see if you waited 1 week, it came right back down to retest, and you could have got into a buy. So if you're a swing trader, you should be waiting 1 week to get in. I'm not a swing trader. I told you guys, I'm a 5-minute, 1-minute trader. I want to get in and get my daily goal. I can't wait 1 entire week to take a trade, you know. But if that's your style, you should be looking at the same thing. All candlesticks have a characteristic. There was a first bullish candle that closed in over a year above there, okay? And then it took 1 week to come back down and retest and pick up all those pending buyers that want to get in. And if you look since then, you made it to the all-time high. If you're still holding and you're deep in profit, okay, you're in the money. Now, that zone is stretched out into the future, okay? So that zone is there. But I always start off with this on the indices because I want you guys to understand how a zone works. But normally what I do when I do a top-down is I start from the top and I move down like I did with gold. So let's continue to do that. Let's start off with the top, okay? We can see that there's a wick, a wick, a wick. That wick right there has got to be the all-time high. Unless you started trading today and you're not aware of that. But that was the all-time high. Wednesday, October 29, US30 hit 48,088, maybe 48,100 on your futures charts. But you can see there's a wick, a wick, a wick, a wick, and a wick. But there's bodies right there, okay? So right there is where I identify a zone, from the orange line to right there, to those bodies, right? And what color should this zone be? It should be red. Why? Because this was a blue candle that came in here, it rejected it back down. This was a very strong blue candle that hit the all-time high, and then they rejected it back down and closed it below there. This was another big bullish candle that came in that red zone again, and what were the results? They rejected it back down. If I stretch it into, again, the future, I can see it came in again blue. They rejected it with a lower high back down. It came in blue again, right there. See how now we're not even transacting in the red zone anymore? They're lowering the offers. They're lowering the offers. But this red zone, stretch it into the future, okay? You can see it's already made one leg coming down. So it's kind of, it came up into the all-time high zone, came back down. This was a big bearish day coming down here, but look at where the volume is right here. This is your neckline. So now, are we going to come all the way back up and then go into there? If it does, there's your double top, your M, okay? And then M has a high probability. The second leg has the more bearish volume that could continue to drop down. However, it could just continue to come in here, break for a new all-time high like gold, what we just saw, and then if it closes above there, we're going to flip this red zone and make it green, because then we could wait for pullback buys in here, and we could be buying for a new all-time high, right? We could see that. If the government opens up again and shutdown is over and Donald Trump is giving $2,000 to everybody, that could be what the market needs to continue to drive to new all-time highs, okay? It could be exactly what the doctor prescribed. If you want to play a narrative game, there's your narrative. And then you can see how it's building its second leg, waiting for government to say, we're back in business, and then US30 is back in business. And if they say government is continuing to shut down this, that, then you can see it's kind of consolidating and might fill this wick to the downside and continue to drop down. But right now, we can see that there's some structure built in the market. Right there, see right there, a body and a body. Oh, this is, sometimes it's so like, if you just know what you're looking for, it makes it so easy. Right there's a body to a body. Let's look at that big bullish candle. Grab your Fibonacci candle for, grab your Fibonacci tool for verification. Look at it. Open, closing balance. Where's that yellow line? It's exactly at 50%, right? And now you look at this bearish day right here. When was this? Friday. Friday was very bearish, and then remember, it didn't close down here because this is a whole daily candle. Near the end of the day, it came back up, it came back up, it came back up, and look, it came back to the opening balance and closed right above that yellow line. So you're telling me that's not an important point of interest at 47,000 on the dot, okay? Look, guys, like I'm not making this up. That was a body, closed body, open. It represents exactly 50% of Friday, October 24. And you can see the push downs, but no volume closed. And look at where it closed. It closed above. And look at the number too. 47,000 exactly. Okay? So when we're talking about psychological numbers at the auction, at points of interest, that's as much confluence as you need to know. If you don't understand the importance of that number and this yellow line, I don't know how else to explain it to you, okay? So that is now holding our neckline. So are we going to come back up or is it going to go back down, okay? So you can see that's why this is an important yellow line, okay? Let's continue. When we're coming down, it's got a body, a body, and a body right there. Right here. Okay, you can see how it's still resistance. We're still pushing down. Lower high, lower high, lower high. Big bearish candle pushing down. And right there we had that extension. So if you want to locate that lowest wick, if we ever do come down there, obviously that's going to be a point of interest because that's what's holding US30 up right now. 46,510. Okay, so now we're in a little bit of a lag coming down. We've got some selling pressure, making lower lows, lower highs, lower low, lower high, lower low, and coming down, and now we're coming back up. This could be another lower high ready to push back down. However, it could be building. If I'm looking for consolidation on a daily and to trap volume, I would trap these two yellow lines right in there. There's your trap. You can see how it's consolidating. There was bearish, came back up. There was bearish, went up bullish. Here was bearish. There really broke down on Friday, but look at where it came right back in, and we're still trading inside this zone. So it could just continue to trade inside here until we either break up to up here, or it's going to continue to push down, and then we're selling off again, okay? So right now, that's where it's consolidating, okay? So let's continue to follow this big bearish engulfing candle, right? It opened and it closed right there, okay? So let's grab the Fibonacci, go from the opening balance on Wednesday of last week to the closing, sorry, on Thursday. And can we identify where 50% of that bearish candle is? Yes, it's right there. I can see today's volume has impulsively broke above it, but we're below it right now. Is there a zone to consider from that big bearish bar? There is. Right here. There's your point of control of this bearish day. I make it red. Stretched it into the future. Now I can see today we impulsively broke above that block. It got rejected at the highest point of the day and coming down. See how we're still trading in the red zone and sellers are pushing it down now, okay? That's why I'm not changing the color of this zone until this daily candle closes in 9 more hours. I did the same thing with gold. It was red, but I went to the 4 hour and I started following the 4 hour. That's why I took the buy, because I flipped and I saw 4 hour volume closed above that green zone. Do you guys remember when I did that? Some of you guys might be over your head and don't even pay attention. But I pay attention to these things. Okay, so do you guys understand? You have to know why I do this, okay? You see how it's a red box still, and I'm not changing it. Someone's saying, well, Ron, why are you not making it green right now? Because this is a daily impulse candle, just like a 5-minute candle, breaking through, and it's getting rejected right now. This candle is not closing. Just like a 5-minute candle might have 2 more minutes to go. I can't change the color of the zone until the candle closes. This daily candle, look right here on the clock, still has 9 hours and 7 minutes. It's showing me it's bullish, but it's showing me also rejected, and this is a confirmed candle. So it's still technically a red zone, okay? Now, let's stretch that red zone into the future, right? And let's follow now Friday. Friday opened, was very bearish. Bearish, bearish, bearish. Did we take out Thursday's low? We did. Right there. Did we continue to go for a lower low? We did. Did we find some support? We did. Where? At this wick? At this wick. That's right around 50% right there of that bullish candle. I don't have the time to do this for you, but you can do it. Opening balance, closing balance, cut line, point of control, stretch into the future. Let me show you, because you guys maybe want clarification. Opening balance, closing balance. This is a strong bullish candle that closed above all of these wicks. That's a kind of a candle you have to identify. Look at right there. There's the 0.5. You can see how Friday's low was right in there. It was now point of control. That was a bullish candle that you can see closed, bullish. You can make the green zone. Stretched it into the future. If you did, you can see it pulled back perfectly right into that green zone. And what were the results? It bounced right up to the all-time high. Stretching it into the future. Look at Friday. It was bearish. This was a big black candle. Came in right exactly into that zone. And you can see how this is holding all those pending buyers. Buying it right back up. Now, when we identify it, right there, we saw respect there. We saw respect there. Stretch it into the future, because if we ever come back down in here, it might be respected again, right? And you could look for buys there. That's nowhere near where we're trading today, but that's why when I figure out a zone, I stretch them always into the future. You guys understand that, right? And now, let's follow. We came back up on Friday, came back up to the opening balance. The candle flipped. It was a hammer at one point, made the highest point of the day on Friday, and closed right there. That's a bullish pin bar, okay? Now, let's look where we closed. Friday closed right here. That was Friday's close. 4,056. They gapped open. Look, we didn't open right here at this yellow line. They gapped it up over the weekend and it opened at 47,075. So there's a little bit of a gap. But you see they kind of filled up the gap. When it opened, it came down. Bearish, 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 kind of filled in that gap and continued to drive. Okay, so let's mark the opening price right there. When it opened, it was initially bearish in order to fill that gap. And they successfully filled it. Not 100% fill. Like it didn't come all the way and fill to Friday's close. Okay, so they filled it a little bit, but not technically right down there. And then at the lowest point of the day, buyers came in, bought to the opening balance. So you see it took out Friday's high. We have a big bullish candle today that broke right through that red zone, broke through 50% right there, got up. That's as high as we got. So that's our daily high currently on US 30. And there's a rejection. Okay, so sellers are stepping in right here. You can see it's lower than this point of interest. It's a lower high, lower high, lower high. So we're still technically moving down with the trend coming down. However, there was a big massive return coming up on Friday. Okay, so we came up to the highest point of the day and it's getting rejected back down. So you see we're still trading in this red zone where buyers are, but they could start getting offers from the higher time frame sellers and start getting, you know, absorbed and continue to push down. But right now it's still bullish. Okay, if we look at the overall pattern, this looks like it wants to come up. Okay, if you look, here was the move coming up. There's the move coming down. You can go all the way down there, but I'd go where the volume is concentrated right there, body closed, body open. So this is the move. Are we going to continue to come through here? You know, we got to get to this yellow line. You see how we failed to close above there? If we get a daily candle closing above there, maybe we might retest this. We might drive up to our all-time high supply, maybe trade right in there. Okay. However, they could just continue to push this thing down right at today's daily high and continue pushing down. So if we lose all of our blue volume today, we're really close to the lowest point of the day. They could flip. This candle could turn into a bearish pin bar or shooting star and just continue to break this 47,000. If we lose this yellow line, then it's just got wicks to fill, right? And it can come down there. So far, we still have a bullish candle on the daily. Let's go into now breaking this down into the 4 hour. Okay, now we can start to see the 4 hour trend. Okay, the 4 hour trend right there hit the all-time high Wednesday at 6 a.m. And since then, lower low came back up, lower high came through, lower low came back up. Look at the bar coding here on the 4 hours. Holy shit. Bullish, bearish, bullish, bearish, bullish, bearish, bullish. And then they released it to the upside, but you see it didn't really, you know, continue up here. That is technically a lower high. It's still below. See this big bearish candle? If you did the point of control of that 50%, you could see it's still below there. Continue push down. Here's a big bearish candle coming down too. And now you see we're transacting right in it. So they continue to push down. There was Friday. So I can see Friday 10 a.m. They sold it all the way down. This candle opened 2 p.m. 2 p.m., 3 p.m. power hour going into the close was where it got the majority of the volume. And then you can see right now on the 4 hours. Now I can see how they gapped it up right here. Here's the opening day today. So at 6 p.m. on Sunday, it opened up. It came all the way up, got to the highest point of the day, and then they rejected it back down. We had this little inside consolidation bar from 10 to 2 a.m. And here's Europe. Europe opened, came down. It filled the gap. See the European fill? Came down, created the lowest point of the day, and Europe had nice, strong, bullish volume coming all the way back up. But you see, it didn't make a new high, didn't come to the daily high. We're transacting still in that red zone. So they rejected it back down. This 4 hour candle, 6 a.m. just opened up. We have 2 more hours to go on it. It opened. It was initially bullish. You see it right up to the red zone. We haven't broke to the purple. So it's still transacting in this red zone. This is where it could be buyers and sellers are accumulating. And it came down, back down, and we're right here. So on the 4 hours, it's still got some indecision, okay? We still got some indecision. We're trading where there was a lot of sideways trading inside here. So yes, technically we could move up to the daily high and move higher. I would be targeting this yellow line. If we move even higher, I would be going into the 4 hour candle right there. Again, I'm basing this off of 4 hour, so I make that a white line. This represents 4 hour resistance if it comes up there. But sellers also have the upper hand. Lower high, red zone could come down, and then we continue selling down today, okay? So on the hour now, let's break it down into the 1 hour. So this is where we can see the overall hourly trend. You can see you kind of have like a double top at the all-time high, continue push down, created that new low, came back up. This is a lower high below that hourly white line, continued to push all the way down, came back up. They really pushed it down. So now we can see on Friday, like right there, 10 a.m. right after Wall Street, 11 a.m. Noon came down there. Beautiful buy at noon. I had a nice little scalp buy at this time. I didn't get this entire move, but I made some pretty good pips on US30 just by buying this. You can see it continued to 1 p.m., 2 p.m. Here was power hour, and there was the close. This is now where they opened it up. They gapped it up, right? You can see the gap up, kind of filled the imbalance, filled that gap, and right here, London, 3 a.m., pushed right back up. 4 a.m. continues to move up. But you see now on the hourly wicks, rejection, rejection, rejection. We haven't closed with any hourly volume above this red zone yet. That's why it's still red. I don't see an hourly candle closing above here to justify making it green like we did with gold. Okay, so it's still, I gotta acknowledge that the sellers are still here. They've rejected it from the daily high, and they've now offered in the red zone. So, you know, it's still trading inside here, right at that daily point of interest. So I don't like trading this shit. Okay, I'll wait for something to happen today. I'll either wait for buyers to maybe close it above here, maybe retest this. We got a new daily high, just like we did on gold. Maybe we'll look for buys on US30. However, if the hourly comes back down here and closes below here, I could be looking to sell, to take it down to the lowest point of the day, maybe drop down to there, right? Otherwise, we might just see it lingering around here and just trading inside here. Up, down, up, down, up, down. Again, it's accumulating for either this leg up or this leg down. You got to be patient. You got to wait for it. Unless you see something that I don't see and you're entertaining, maybe you want to go sell side, you see it's already selling down, you can. But I don't see any confirmation above or below this zone, okay? So if you're selling, you got to understand that it could come right back up. And if you're buying, you got to understand it could go right back down, okay? So I'm not an hourly trader. So what I do is I go, again, to the 5 minutes. If I was an hourly trader, this is what you got to wait for. You got to wait for something up here and wait for down here, okay? I don't have that time. So what I do is I go to the 5 minutes. Now I can see how the 5 minutes are actually, there's where we opened. There was the gap up, big, huge, strong, crazy bullish candle at first 5 minutes of market open. Then it got rejected. It came all the way back down. So if you were in that candle and you didn't do anything, see what I mean? It can move up, and then look how quickly it comes right back down to where it opened. And where it opened, it respected and came back up. Then it filled, you see, it kind of filled that little imbalance, came back up. It's not really breaking above there. There's your 5 minute resistance. Okay, right there, right there, right there. Finally, it came back up. You got a bar that closed above. Held 50%, got a bought right there. There it moved up, back down. See how it's respecting the yellow line, daily point of interest. Came back up. See right now the 5 minutes, you can clearly see where the bodies are and impulse. We're not getting any 5 minute volume closing above there. They pushed it back down, it came back up, pushed back down. Look at, now we're kind of got a double bottom on the 5 minutes. Right here. Came down, back up, came down, second bottom. Is this going to be the leg that continues to push up through here? Maybe break out, or maybe they're just going to continue to reject this thing back down and then we're selling off. Okay, so if you want to trade in this zone, you're welcome to. But you got to know where your 5 minute resistance is, your 5 minute support. What I like to do is I measure from the red line to the red line. You see how it's exactly 50 pips on the dot, 50. Again, why is everything targeting these 50%, 50, 100? Markets move in like fractals, like psychological numbers, okay? If you don't understand this, then please research this or learn why markets move like this. This is an auction, okay? And auctions like these whole psychological numbers because auctions like to be efficient. They can transact better. Look at the points. I'm not making this up. Right there. There's support, support. Look at the number. 47,175. Look at this. I'm not making up this red line. I'm looking at the bodies and wicks. Look at the number. 47,225. You know what I always say, how things move in like 25-point increments. 47,000, you got 47,025. 47,050. 47,075. You got 47,100, 47,125, 47,150, 47,175. You got 47,200, 47,225. You got 47,250, 47,275. I can continue to do this all day, all night if I want, but I'm not an auctioneer. I'll lose my voice. Those guys are professional what they do. I'm not. But that's how you can trade to targets, understanding psychological levels, okay? And now you see where we're trading. Do I see any 5-minute volume closing above this yellow line? No. I see a impulse, 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 impulse. Okay? So if you got caught buying, you are buying on impulse with no confirmation. Okay? So don't be surprised that, there's sellers still there, right? I don't see one blue 5-minute candle closing above this yellow line. So we have to literally wait to see if we'll get one to close. Unless you have an intuition, you think it's going to continue to break because you see higher low, that's fine. But you're going in on impulse, okay? There's no confirmation at all that any 5-minute volume has closed above this yellow daily point of interest. I just see a lot of impulse moves, but no follow through so far. Gold. Okay, sorry guys. Wow. Okay. Like the woulda, shoulda, couldas. I wish I was still in it, but I'm not. Okay, so let's review. Did it break that psychological yellow line? Yes, it did. Look at how the yellow line now acts as support 2 times. And look at the big bullish candle continuing to drive maybe to that hourly white line. But right now it's got those tweezer top highs right there. Okay, and see that big bullish candle? Did you guys figure out cut it in half? You should. That's me just eyeballing cutting in half. But let's grab Fibonacci tool. That's a big bullish engulfed candle. Let's find exactly. Okay, so Ron was a little off by cutting it in half. There's the halfway point. Look at the number. 4,101, just right above that 4,100 psychological. So if you want to find the point of control of that big bullish candle, if it retraces down, there's your point of control. If it continues to hold that, it could go higher. I would be targeting that white line. That's a 4-hour resistance at 4,109.10. Okay? Wow. I wish I was still in this. I'm not, but I did everything at this kind of yellow line. But if you're still in that, holy shit, that's like almost 200 pips up to there. Wow. Is anyone still have a runner? Wow. And you see those sellers that were selling at the highest point of the day? See how there's a 200 pip squeeze? Okay, those sellers probably, if they're over leveraged, I'm sure that they encountered some serious drawdown or even lost a lot of money with leverage. But, I know everyone wants to sell at the highest point of the day, but you still got to understand with top-down analysis how it was still very bullish. That's why we entered buys. Okay, so you see those equal highs. This is another technical indicator right here. See those equal highs? Those are called tweezer top highs. Right exactly at 4,105.80. So you see that there's no new higher high, so it's equal highs. So sellers are coming in right at the exact point to push this thing down, and you see now how it came right to the top of that green box that we just put in. So again, we might be flagging here. See the wick off of the top of the green box. Learn how to use the Fibonacci tool to figure out point of control candles. It might be a game changer for you. And if you got trailing stop loss, I would be maybe moving my trailing stop loss just below this red line, securing all of this, right? Holy. Okay, so just going back to US 30 right here, I just want to add my daily bar indicator right here, just to let us know how it's moving on the daily. Remember opening, little push down to the lowest point of the day, big bullish candle, got up to the highest point of the day right there. The highest point of the day is the first 5 minutes of open, okay? And then you can see that there's lower high resistance on the 5 minutes, and we're continuing coming down. So that's how it looks. We'll revisit US 30 like more towards 9 a.m. coming into Wall Street, okay? But if you are trading it, that's where we are right now, okay? Let's focus on gold because we got 10 more minutes to go into COMEX. Morrow, is that a double bottom you see on the M5 on US 30? Yeah, it is. But you see, Morrow, it is technically a double bottom. Okay, look. Morrow came down, one bottom. There's the resistance, the red line, came back down to the red line, double bottom. But you see right there, Morrow, you see, traditionally the second leg has more volume to continue to break out. But you see where it's struggling, Morrow? At that daily point of interest, that yellow line. You see how it's struggling? It's an impulse, 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 impulse. And then you see how the sellers are still pushing it down. So it could be kind of a fake double bottom and wants to maybe continue to push down, okay? So what I would be waiting, Morrow, is to see if we get a blue candle to close above this yellow line. It's still making higher lows. So technically, if it comes back up and closes above, it's still respecting the double bottom, but we need a confirmation candle closing above, because if it does, maybe we'll retest this. Then we can maybe entertain maybe a buy to take us up. But right now, still the buyers have not closed above here. It's still technically building, but we don't have confirmation yet. Okay, and then look at gold. It's now, again, just flagging from the tweezer top highs to the top of that green zone. Could be another ongoing bull flag. But remember now things are going to get volatile. Now we're moving 8-9 minutes into COMEX, right? So they could redistribute all of this volume to the downside during COMEX, okay? Or it could just come down briefly, like down to revisit this, back to this yellow line or maybe this zone, and then go right back up. But you have to think about this now, because most of you guys are in buys, still holding buys. What is your plan now? What are you guys doing going into COMEX? Okay, just going to move this to the side here. Get rid of this. Because we don't know what's going to happen during COMEX, right? It's the commodities exchange specifically for gold that's been closed all weekend, and now it's opening up. Okay, so there could be an influx of orders ready to get executed. There could be pending sell orders and pending buy orders, okay? But we're going to see a lot of volatility, right? You're going to see much bigger candles than what we're seeing right now, okay? So this is where you have to come up with a plan now. Whether you're in the buy, you got to consider at least managing your risk, go to a break even, have a trailing stop loss, secure some profit. If you're looking to sell, this might be an opportunity to look for sells. Where are you placing your stop loss? How much are you risking? And if you're like me, if you're not in a trade, maybe we wait to see how COMEX market opens before we do anything, right? So, and then also what we got to do is just verify if we have any 8:30 news coming up. We don't have any high impact news, but we do have some US FOMC speakers. So you might see in the notes over here on Financial Juice, you might see their remarks from member Daly, and then later on with Musalem. Okay, I don't think they're gonna really dictate the move of gold, but they have remarks regarding monetary policy. Guys, hit the likes on YouTube, please. Subscribe to the channel. We're doing 2 sessions today, okay? So we're doing New York, and we're going to come back for, if you look on our schedule today, we're coming back to do a Tokyo session with gold later on. So if you want to join us, this is today's session. We're going to be here again later this afternoon in the evening, 7 p.m. to 9 p.m. later tonight, okay? And this is our schedule for the week, okay? So we're doing, again, another 2-session bonus tomorrow, because Friday we're going to take a little day off. Go away for the weekend, come back Sunday for the day 3 of the risk management bootcamp on the charts and answering your questions, okay? Remember guys, we're not just traders, we're risk managers. You have to manage your risk in order to survive in these markets. So you're not just trading candles, you're managing your risk, and you got to manage your account. You're an account manager. You're a risk manager. We're managing a lot of things. We have to manage also what we're going to eat for breakfast. I'm starving. I don't know if you guys know, but I went to an all-you-can-eat buffet Saturday. We did the boot camp, started at 11, and we finished at 4 p.m. I didn't eat anything. I even had a really light breakfast. I was specifically not eating anything so that I could destroy this buffet. I went to this buffet, and all I ate was prime rib and crab legs. I swear, 7 plates. And then when I came home, 7 p.m., I laid on the couch, I put the hockey game on, and all I know is I woke up at 3:30 a.m. Eastern. It was a food coma, I swear. I woke up at 3:30. I had no idea where I was. I didn't know what day it was. I didn't even know what was going on. But that was a massive food coma. I don't recommend that for anybody. But the prime rib and the crab legs were very good. Yeah, Danny. Okay, guys. So you see right now going into COMEX, we have almost 4 more minutes. We're starting to see the leg come down. So those tweezer top highs were kind of a clue. Okay, you got to look for clues in the market. It's kind of like playing that game Blue's Clues. There, tweezer top highs, so they did not allow it to go any further up, okay? So right now we're coming down, pushing down. Have we closed below this point of control of that big bullish candle? Maybe this candle will. Then I'm going to flip that red. Then it could show that there's going to be more selling pressure coming into COMEX right when COMEX market opens. But when it comes down, we might be looking to maybe buy a possible pullback. Remember this kind of consolidated zone right here? This flag? Right there, where it was kind of flagging in here. If it breaks this daily point of interest and comes into this could be a nice little block to maybe consider buying gold at a discount, okay? If we look from how high it was at this red line, and it comes all the way down here, that's 100, 110 to 120 pip discount, buying back in the block. And that's why I said, guys, if you're in buys, you got to consider the time right now going into COMEX. You could be leaving a lot of money on the table. Right? So here it comes down with 2.5 minutes more to close. It's got new lower lows, new lower lows. Those equal top highs right there were kind of the clue that things were not moving any higher. Okay, this doesn't mean that this leg is, that's it, gold is crashing. But you can see it needs to retrace back to either here. Remember where we bought at the previous high day? So it's not like it's completely crashing down, but it's pulling back. And then let's, again, go through the drill. Let's follow where the candle will close in 2 minutes. Will it close below the green box? If it does, I'm going to flip it red. If it closes inside the green box, it's still technically green. If it closes above the green box, we could get a bullish open at COMEX, okay? And then looking at US30, Maro, see how it's still building, okay? So follow to see if we're going to get any volume closing above that yellow line, okay? And let's watch gold. Here we go, 90 more seconds to go. No, it's not healthy. What I did is not healthy. It was the first, I haven't been to that buffet in like 5 years. So, you know, I went all in. I didn't know how to manage my risk at that buffet. Okay, so let's watch. Look at the return wick. Okay, 1 more minute. Wow. Okay, so if it closes above here, COMEX could open blue and just continue going up bullish. Wow, look at that. It was a big bearish candle coming down here. They rejected it back up. We're right back to the opening balance of this candle. It's got a big range. So this could, look at it, turning blue. This could pop blue and just continue driving right at COMEX. Let's watch this thing. Wow. Gold is pretty crazy this morning. I'm just going to check my spreads. Ooh, my spreads have gone up a lot. 1.2. When I took the first trade, it was 0.4. So spreads are up due to COMEX volatility opening up. Here we go. Okay, so open blue, ignited quickly. Okay, so it's filling. Okay, so it's filled to that wick. Filling back up, filling back up. Will it get rejected back down, or will it continue just to fuel itself back up and continue to drive? So it came up, lower high. I can see it traded right into about 50% of that previous bearish candle. I didn't draw a cut line there, but you can literally see right into 50% right there. So it looks like it's bearish, but it's still above this green box. We still have not closed above here. So if it breaks through this, it is an impulse break. Just like this candle was impulse, just like this previous candle was impulse, and then it went right back up. So this could be another impulse coming down, but look, it's still holding and ready to maybe continue to drive back up. Okay, we can wait for this full 5-minute body to close, but we gotta wait 4 more minutes. Okay, I know a lot of us don't have the patience to wait 4 more minutes. If you want to buy, you can look for buys, still holding the green zone. However, if we're going to wait for, we're still kind of in this consolidated area, in this neutral zone still. But you see how no bearish bar closed below here. So it's still technically still holding bullish green volume. Now let's see if it will create a new high. Remember those equal highs right there? Okay, so it needs to come back up there and break for a new high in order to continue to move up. If it fails or a lower high, we could be coming right back down. I'm not in a trade yet. I didn't like the spreads when I just looked at the spreads. Now the spreads are coming down, okay? So I like when they come down. Okay, so it's coming right back up bullish. I'm watching to see if it will take out those previous highs. Not yet, okay? So you know what I mean? I'm watching to see if that's still technically a lower high, tweezer top highs, pushing back down. Okay, so they're now rejected all of those opening buyers of COMEX. Half the candle is exhausted. We got 2 more minutes and 20 seconds to go. So there's a sharp rejection, okay? This could be like where it came up, came back down, came back up. Like that wick is kind of like the second top, and then you got this M coming back down. So it could kind of close below here, retest this, and continue to fill that wick and drop down to that daily yellow line, possibly to that green zone down in there. But the buyers are still holding the opening balance currently, okay? So this is why, again, it's in that consolidated zone. That's why I have it in this neutral zone. Buyers are buying, sellers are selling. Buyers are buying, sellers are selling. There's no clear direction unless you're going with the bullish flag pattern. That's your only kind of still direction that's still holding. So I'm waiting for this body to close. What's your guys' bias on this 5 minutes, okay? Not what you think where gold's going to move next week. Just right now. Like, do you think we're going to break bullish above these equal highs? Or do you think sellers are going to bring it below this green zone? Sell right now? Deku, you're in sells? I can see why, but you still have to be careful, okay? Bear pullback, Armande. Okay, so a lot of you guys are thinking that gold is going to sell, okay? So let's go from the top. We've got lower high, equal highs. That's correct. If I was to draw like a 5-minute zone, where those equal highs were to those bodies, I would have a red box right here to kind of illustrate that we got 5-minute selling pressure. Okay, so you guys are correct. We got a seller's block up there, still holding. But you see where the volume is still kind of consolidated inside here, okay? So I'll get rid of this cut line. It's irrelevant in here. We're continuing to watch this. So now you see how it's bouncing off this green zone, still holding, and it's bouncing away from this red zone. And we're still just kind of two-way trading in here, buying and selling, buying and selling. So I'm going to wait it out until I see something happen above here or below here. Otherwise in here, it's in an accumulation phase. You either pick one side and you go with it, right? And most of you guys said sell side, but you still got to respect that there's higher low, still above the green zone, still a strong daily candle. So you got to be careful, okay? This is where if you're entertaining a buy or sell, I would go a smaller sizing, testing out what's going on up here. And we have 5 more minutes to go, and then we're getting a new 30-minute candle at 8:30. Normally at this time, there's some US news. We don't have anything scheduled for today. Mosherif, you're just watching? Me too. Me too. I'm just watching myself. Okay, so it's coming back up. That rejection was another lower high, lower high, lower high. Maybe what we can watch too is like, are they going to spike the liquidity and then get rejected? Then that might give us confirmation to maybe look for a sell. Okay, that's another thing. We got to look for clues. Okay, so we had really nice volume earlier where we were trading. See how nicely it was trending up, bull flag, go back up, bull flag, go back up. Now we're having like some candles breaking bearish, coming back in, breaking for lows, coming back in, coming back up, getting rejected. This one was bullish again, coming back up, lower high, lower high. So we got now a shooting star candle coming down, right? So it could continue to come down, but when it comes down, look, it picked up a wick and going right back up. So this is difficult volume. This is difficult, right? But looks like it wants to sell. Looks like it wants to push down. Okay, so if you're looking to entertain a sell, I would definitely just put my stop loss either above these equal highs. If you want to give it room to breathe, by that white line, that's that 4-hour resistance. Okay, that's a good rejection. We got 2.5 minutes to go. So we can also look at the 30-minute candle because we're getting a new 30-minute candle. So if you look at the 30-minute candles, they're very bullish. Very bullish. We've had starting at 6:30, 7, 7:30, and 8 a.m. So we're getting a wick on the 30-minute candle. But let's see if we can close below this green zone. Maybe our next 30-minute candle at 8:30 will be bearish coming back down. We could look for sells. But this could still close above here and continue going up bullish, filling that wick. And look at how overbought our 30-minute candles are. So they're due to come down, but they don't necessarily have to come down, right? But they look like they want to break. Even on the 5 minutes, looks like a double top up here. Came up, one top, coming down, neckline, came back up, second top, bearish candle. All we need is kind of closure below, maybe flip that green to red, retest this, then we start dropping on the new 30-minute candle. But you see how it came down again, caught a wick at that red line and going right back up. 90 seconds to go. So, you know, if you entered prematurely, I understand, you know, but we're looking for confirmations. Or we're waiting for 8:30 for a new higher time frame candle to open up. Okay, so you still see how this green zone at this red line, 50% of it is still holding. It's got a wick. Sellers are trying to push it down, but they're struggling because there's buyers still here at 4,100. It's not easy, guys. Like, it could go both ways. I know some of you guys are trying to sell, some of you guys are trying to buy. Just the market is showing that as well, showing sellers and buyers. That's what I mean. It's tough to predict this area here. That's why it's better to wait for confirmations. And here's the close in the next 30 seconds. So remember, this candle opened up blue up to there, lower high, pushed down, came all the way back down to the opening balance. It was very bearish right down to there, came right into that green box, then the buyers came right back up. But now we have engulfing bearish volume coming down. So it might engulf, and then next candle could open bearish and push down. It could open blue, come back up and get rejected, and maybe that new 30-minute momentum could break this. And here's the close. Okay, so closed, open blue, ignited. Will it get rejected right at 50%? Right there where my cursor is? Or will it come all the way back up and engulf? Okay, so came up, lower high, rejected. Remember that opening balance of that blue volume is still holding. This is representing a 30-minute candle. So it opened strong. It hasn't lost its opening balance yet. This is just the first 30 seconds. Okay, so there they rejected it. Sharp rejection. Still holding its opening balance. Still holding. It's refueling back up now. Okay, let's see. Will they reject it again for a second time? Count how many times they reject it down. Okay, still strong bullish. Reject it again. Second time. Okay, let's see now the reaction at the opening balance. Will it still turn? Will it be blue and refuel itself for a third time? Or is it going to break and then it's going to be a bearish pin bar ready for maybe a technical sell? But you still see how it's still refueling its blue body. Okay, so it's really difficult as of right now to determine where this thing wants to go. But it's leaning that it wants to sell. Lower highs, lower highs, lower highs, pushing down. But still has not lost its opening balance. Okay, so I'm waiting. I'd like to sell this too, but I'm waiting to see it's still holding its blue body. There's now another sharp rejection. So that one should technically, there. Now we flipped black, so we lost opening balance. So now sellers are in control momentarily of the candle with less than 3 minutes to go. Okay, so now it's a bearish shooting star candle coming down. Going back up. Okay, so let's see now if it can come back down with some black volume. Might be, yeah, right there. See how it came down, back up, coming down. So now you see how sellers are offering at the opening balance of this candle. So it's now fighting at the opening balance, going up, down, down. Coming back up blue, going back down. This is those indecision candles. They're tough. They're not easy, okay? But I'm still seeing sellers are there offering, pushing this thing down. And we have less than 2 minutes to go into the close. So I'm leaning towards selling. I'm leaning towards. I haven't hit the trigger yet, but I'm ready. Okay, I'm going to go into sell now, okay, with 1:40 left on this candle. Now, while I'm in a sell, I'm not determining my TP yet. I'm determining where I'm going to place my stop loss. So number one, I said I want to have my stop loss above the red zone. I want my stop loss above those tweezer top highs. You see where it is right now. So I could go and give it a lot of room to breathe all the way above that 4-hour white line, but that might be kind of excessive. So I'm going to put it right there, just above those wicks, right up to there. And then my TP would be to come down, fill that wick, maybe break this yellow daily point of interest and transact right into that green zone down in there. So I'm in a sell. I know I went in prematurely, but I waited and saw 5 rejections, and then I saw sellers were filling up. So this could be 30-minute now volume coming down. I have not changed the green zone to red until we get a black candle closing below here. So I'm in prematurely, but I was following how it's coming down. Okay, so let's see if we can officially get bearish volume closing below this green zone so that we can momentarily flip it red to see if we can get a few more bars pushing down and just retracing back down into here. Okay, so I am in a sell. Let's measure down. If it can come down, you know, fill that wick would be about 27 to 30 pips. That's when we can start reducing risk. If it can get down to that yellow daily point of interest, that's about 40 plus pips. Okay, that's definitely where we should be reducing our risk. And then if it can get down to the ultimate target, that could be about 60 pips down there. Okay, so we're pushing down with this volume. There's those equal lows. Okay, just like we have equal highs, we got equal lows now. Did it close below the green box? Yes, it did. Go green to red right now. Okay, because now you see the buyers are buying. Let's see if they can quickly get rejected now that I flipped the zone red, showcasing that the offers are now in the red zone and coming in here. Okay, so it's a big blue candle, but now they're transacting where there could be offers now. Okay, so you see how fast that dropped down to there. Okay, but now open blue, we got a rejection. Okay, let's see now if we can come back down to the opening balance, take out these early buyers and continue to push down. Okay, but it's a strong bullish candle coming right back up. So we have to rely now on some offers above us. Okay. So you see how quickly that red candle came down, and look at those equal lows. Like, look, it didn't, the market didn't even allow it to break that previous low wick. They're equal, just like we have equal highs. So when you have those equal lows, that stalls the market from breaking down, and then you get a bullish candle coming, returning right back up. So now what we got to do is, well, what I have to do is rely to see if I still have sellers above here. Okay, I didn't get the sellers where I wanted them initially, right at the red zone. So maybe we got to see if they're up here now. Okay. So now the volume is now transacting in this zone. Okay, we still have offers up here, but there's still a lot of bullish volume coming in. And we're right around this 4,100 level, the psychological 4,100, that's still holding good support. Okay, good rejection. You see, it kind of came right through the red zone to the top. We didn't get right at that red line. But we do have sellers in sight. They've absorbed all those buyers. So now you see how the candle flipped like a pin bar. So that's perfectly what we need. We're back down to the opening balance. We flipped. Now we just got to redistribute. So when we're redistributing, we're filling back. Let's see if we can come back down to those that red line, those equal lows, and break for a new low. And then we can go further into profit. And then we can maybe start reducing our risk on the trade, right? Let's see if we can break right now. This is the time we want to break. I don't want to see 3 equal lows. Then we got those triple tweezer bottoms. That's nasty. There it is. 3 of them. Coming back up with the buyers now. So now you see the fight between buyers and sellers at the opening balance right below our red zone with 2 minutes to go in this candle. Okay, so let's continue. We got lower highs off the top. Those equal highs. But you see we're struggling breaking this red line right now. This 4,098 and 50 cents. That's where a lot of buyers are coming in right now, protecting this daily point of interest right here from breaking down. So now we're coming back down with more offers. So let's see if this is the one that can break and push us down. Okay. If it comes down to the red line, remember, you should be up approximately 25 to 30 pips. If it can break, then you're going up 35, maybe 40. That's when you can take your stop loss and start reducing your risk. Right? Here it comes down. Nice shooting star. Let's break this shit right now. Come on. Yes, there's the break. Beautiful. Okay, so start reducing your risk. I'm going to start to reduce my risk to break even now. There it is. Right down to that yellow line. I have now 0 risk. No risk in the trade. Again, now I just got to play with my profit. Okay, so it came down to that yellow line, 42 pips down there. If I'm following the close of the candle, I got to follow 45 seconds. So now I have no risk. Okay, I have nothing. If it comes back up to break even, it's a break even trade, but I can't lose any money. I had one profitable trade earlier, so again, I'm in another profitable trade. Now it's just about managing the profit. Let's see if we can break this yellow line. Let's see where we're going to close. Will we close below these equal lows? We can turn this red line from support to resistance. This might be our cut line of this volume, right? You can see it might be just exactly right at 50%. But if we can break this, yes, we broke it. Beautiful. Okay, I'm closing out 80% down there. I got my 50 plus. I'm closing out 80% down there. I get my 50 pips out. I got mines. So I now have 20% break even running, guys. Beautiful. Okay. Exactly what I wanted. The close, break those, the close there, came down, grab my 50 pips and out. Leave 20% running. Okay. If it comes down to the target of the green box, I'll close my remaining 20%. But we're going to eat again. We're going to another buffet for breakfast. We're going to get prime rib, crab legs, and pancakes for breakfast today. We're eating. Did you guys see how we took the trade, stop loss above there, as it was breaking, we took stop loss to break even, scaled out, and leave runners. Okay, and now you see the retest. What is it retesting? The red line, what I just said. Red line is support, support, could turn into our cut line, and you see how it came blue, 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 right up to the red line, and they've rejected it back down. Okay, so you can see how it's holding, turned from support to resistance live. Okay, so all we got to do is continue to come down, offer, break that low, transact in this green zone, and that's where I'm going to close out the entire remaining 20% if it comes down in there. Why? Because big buyers could be in there, and then it could move 60 to 70 pips in there, and I'm happy. Guys, hit the likes, hit the W's in the chat if you understood that scalp right there. Okay, subscribe to the channel if you want to join us again in Tokyo. If you want to join us tomorrow, 2 sessions tomorrow, guys. You can learn and earn with us. It doesn't cost you anything. It costs you a like. It costs you a subscribe. Last time I checked, YouTube doesn't cost anything. What is the yellow line? It's a daily point of interest that we're about to break right now. If you know exactly what you're looking for every single day, this should become like clockwork. I'm telling you, it should become like a daily routine. It might, some scalpers say it's pretty boring doing this because you're looking for the same exact stuff every single day. Oh, don't tell me that. There's 523 viewers and only 26 likes. If that's the case, I'm shutting down YouTube right now. We've got you guys over 250 pips today, and if that's the ratio to viewers to likes, I'm out of here. I'm out of here, guys. You probably won't see me for the next 5 years on YouTube. There's no point. That's ridiculous if that's the case. I don't want to believe that, but okay, so you see, guys, like I was talking to you guys and I missed my transaction. So you see how it came right into there? See, I'm not paying attention because I'm talking to you guys on YouTube. See, I missed to close out my trade in the green box. Okay, so we got 90 more seconds to go in the close. We've got a spin top working its way down. If we can get 5-minute volume closing below that daily point of interest, we could have one more considerable push down. But you have to respect this green zone here, okay? Because look at, that's what created that bull flag to take us to the daily high, right? And now we're selling right back down into there, okay? So I missed my exit right in there. Shit, okay? So now I got to continue to hold this thing. This might come back and now hit me at break even. That's why, guys, like zone to zone. You know what I mean? From like this red zone to that green zone. Zone to zone trading. I didn't execute in that green zone my 20% runner because I was sitting talking about the likes on YouTube. I lost focus. Okay, so there's the close. It closed above the yellow line, so it's still technically bullish above that daily point of interest. However, we could be flagging now. Beautiful bear flag right here, okay? So if we can continue to flag down, see, this is kind of that Tetris piece we were talking about. Bear body, inside blue, we opened ignited bear, so we need to continue come down and break, fill that wick, and transact in the green zone, okay? So let's see if the market will reward me to come down, back down into that green zone, and then start to either scale out or hold to see if we can break through there, okay? So you can see we're developing a bear flag right at that daily point of interest, okay? That's why there's sellers, buyers. Wow, okay, we might get our bear flag breaking down, okay? That would be really nice, okay? So it came down, got a wick, coming back up, but you still see how we're holding our opening balance of the candle. That's the importance and the significance of an ignited bar. Please learn what ignited bars are, okay? If you don't know what they are, tune in with us on a daily basis and I'll teach you what they are, okay? Because that's a clue. Look at it. Now we're flagging down, pushing down. Let's see if we can take out. I'm closing out the remaining 20%. There it is. The Forex gods rewarded me again. I'm going to pay attention now. So I'm closing out the remaining 20%. Another successful trade from one zone to the next zone. I'm happy. That's a 70 pip fill. I'm good, right? I've exceeded my daily goal. Now I feel like I'm getting greedy. I feel like I'm at that buffet where I can't stop eating now. And we're not even at 9 a.m. right now. That's a beautiful move, guys. Okay? But we have to recognize this green zone because that could be, that's it. The move is over. Like, it came up, it came back down. This is where it could come, come back up, right? Unless it closes below there and you're still holding, you're going to flip that green zone red because then it could have further move, more room to drop. But I don't necessarily trade like that. I trade from one zone to the next zone. I'm very disciplined. I stick to my plan, and that's what keeps me disciplined every day. I don't sit and second guess myself, right? I know some traders say, Ron, it's crazy what you do. You should be holding longer. That's okay. That's for my lot size and what I just did there. That's more than enough for me. I'm not greedy. Okay? Am I leaving some money on the table? Yes, I am. But how many times does it come down? That candle came down, could have came and been right back up here. How many times has it done it on these live calls? A lot, right? So I don't play this game with what would have happened, should have happened, what could have happened. Trade from here to there. It's like driving in a car. From this point to that point. Point A to point B. I have rules what I do. When it starts dropping down to a certain point, I take my stop loss, I go to break even. I reduce all risk. I have no capital at risk. And then my next thing to do is, when it gets a certain point, 50 pips, whatever it is, take out some profit. You don't have to take out 80 like me, 80%. You can take out 20%, 50%, whatever you want. It's your account. I don't care. You do what you got to do to make you happy. But then the remaining 20%, I close at this zone. My job here is to educate and kind of coach, okay? I can help with entries. You saw in the last two trades, I helped with entries. I can help with managing our risk. You can see when it moves about 30, 40 pips, we take our stop loss break even. I've done my job. After that, it's up to you where you want to take out profit. I took out profit on that gold buy right over here. There was other traders that held all the way up there. It's not my business, right? That's your business. And then you see how it comes in again in that green zone. That's why I didn't get greedy. Look at the return coming back up. That's why now I say to myself, I'm happy that I closed out, right? I don't play the game with, well, if this candle came down, it could have gone there. Well, I can still say the same shit to you. That candle came right in there. Why didn't you take out? Because now it's going back up, right? I don't play those games, guys. If you do that, then you're gonna be inconsistent in the markets every day. Have a disciplined plan and just be happy with taking money out of these tough markets. These are very volatile markets. It's not easy. But if you're still holding, you got to continue to follow the volume. Like as if I was still holding, I would be continuing to follow the volume. Did it close below the yellow line? Yes. Did it close below that bear flag? Yes. Are we having difficulty breaking this green zone? Yes. But could it continue to go down? Absolutely. Okay. So you still see the sellers are there. There's another ignited bearish bar filling that wick. All we got to do is fill that wick, make a new low, close below there. We'll flip this green zone red. It's got further room to push down. But right now, you know, it comes in, it's now transacting in the green zone. So it's coming up, coming up, coming up. But it's having a difficulty with buyers, bringing it back up here. Okay, so if you're continuing to run it, just continue to follow candle by candle. And we're moving into 9 a.m. in 10 more minutes. Okay, so we have to also understand we have a new hourly candle coming in the market. So to recap, we took this trade at 8:30. Remember? This is the 30-minute candle. That's exactly what I said. Remember when we're closing going into COMEX? It initially turned up and we're in a sell. Well, I closed out, but if you're still in, you're part of this big 30-minute bearish engulfing candle that's already engulfed 8 a.m.'s volume and almost 7:30. So that's why this block, this green block, is crucial. If this 30-minute candle can close below here, you might even flip that point of control and another 30-minute candle could continue to come all the way down in 8.5 more minutes. But it could also pick up some buyers and come right back up. So if you're watching the 30-minute candle, it's really bearish coming back down, okay? Do I wish I could have been still in this? Absolutely. But I'm also happy and I look at my account that I've taken out money. So, you know, I don't allow this to affect my psychology when I'm trading. Again, I'm a scalper, so I'm normally looking for 20 pips, 30 pips. If I can get 50, 70, 80, 100, I'm not a greedy person. I'm a greedy person at the buffets where I eat, but not in the markets. Because I've been humbled too many times. And I know that the markets are above me, okay? As much as I want, just like all of us, we want the biggest trades we can get, but sometimes you got to be happy. I'm happy that I helped with entry and managed our risk. That's it. I've done my job. You can do whatever you want with your own profit. Everyone is different. Everyone has different goals. Thank you, Cash. I appreciate you, brother. I appreciate you. I'll get a coffee. Thank you, man. I appreciate you. Yes, Vansh, I believe you. The new 20 pips is the old 50 pips. Yeah, the 20 pip scalps those are history. Now it's like 50 pip scalps in the markets with this volume. Holy shit, guys. That's another 100 pip return. Okay? And then you see this big buy where we originally took the buy. Look at, that's why I leave it there. If we didn't do anything, look at how the market can return all the way back down. And, you know, that was a 200 pip move. And you see how the market can come all the way right back down. Okay? So that's why nothing can stop you in these markets. Like, that's why you got to take out money. Look at these buyers that are holding for more than 200. They want 300. They want 400 pips. And then the market says, nope, we're coming right back down to where you entered. That's why. It's demoralizing when that happens. Yeah, Lee, exactly. The volume makes sense. The reason why the 20 pip, 25 pip, 5-minute candles are now 50 pip candles is what Lee exactly said. Gold has doubled in price in the last 2 years. Maybe even tripled in price. You know, like, yeah, when it was trading 2,000, now we're at 4,000. So double the price, double the volume. Double is the coffee that we drink, right? Now this candle, if it closes below, go through the motions. Make this green zone red. Because if it comes back up green, it could trade right in there and be a red zone and then continue to go back up, down. Okay? I would have loved to continue to be in this sell with you guys, but I'm not. If you guys are continuing to bank on this, God bless. I hope you guys get the full move all the way down to this purple line. And then closing in 20 seconds. And then also, if you're looking for buys, watch and see if the buyers will bring it back up, close it above here, retest this zone. If it's green, we could be making our way, back up to where? To this red zone, to the highest point of the day, right? These zones just continue to stretch them into the future. I'll maybe get rid of this bear flag right now because it's too many zones. Tidy up some cut lines if you like. Okay, so it did close below, correct? Go green to red. Okay, so here's the bullish candle coming right back up. Let's see what happens. And then look at where the red zone is. It's basically like if you cut it, it's 50% right there, guys. You can see how everything lines up perfectly. Like that bearish candle opened and closed right there. That's exactly 50%. And it's where a body, and a wick return this move back up. Now we're closing below it. So this was a supporting area. Now it could be resistance in the future right now. So it came back up, hasn't tapped in there, lower high. If sellers continue to push this thing down, we could continue, create a new low and drop down. But that's a big move, okay? How are we doing, guys, okay? Talk to me. We've had 2 good trades. How are we doing? Do you guys understand the trades? Is there anything that you're not sure about that you need clarification on? Do you guys understand how we manage risk? We did 9-hour boot camp this weekend, all about risk management, talking about all of these things, about volatility at opens, at specific opens, COMEX, all of these things. We talked about how to reduce your stop loss to break even, scale out some profit, scale in, scale out method. Were you guys like kind of stressed out in trading today? Were you guys nervous? Did you guys handle your emotions? Okay. Do you remember when we took this sell? It came up, a little bit of drawdown. How did you handle that drawdown? Were you guys okay? Remember I took this sell right there? There was a little tiny bit of drawdown, not much, but still technically there was 5 pips of drawdown. So some people react differently. They panic, right? You got to know how to channel your emotions in trading as well. How do I do that is when I take a trade, I've already calculated in my head what my sizing is. If it hits my stop loss, I've already calculated the distance and I've done the math in my head. So I know if it comes up there and hits my stop loss, I already know before it hits my stop loss how much I'm losing, right? And if I'm okay with that and it goes with my daily 1% of what I'm risking, I'm okay. Then what I'm doing is I'm following the candlesticks. I'm following the wicks. I'm following where they close. I'm looking for clues. I'm not looking at my profit loss and panicking if it's in the red, right? That's what some traders do. They're just looking at their profit loss and then they're panicking and they're failing to look at the price action. They're failing to look at the candlesticks. And that's where they lose focus, right? And then that's what causes them to, can't control their emotions. Trading is all about controlling your emotions. You should be calm, cool, collected. If you want, add one of those heart monitors on you when you're trading and see, does it start going excessive? Does it start going crazy? Or are you cool when you're trading? Justin, welcome. You haven't traded, busy morning with the kids back home and now getting ready for the day? Awesome. We've taken 2 trades. They've been really good trades. But now, guys, we're going to move into Wall Street, okay? So in the next 30 minutes, we're going to go into Wall Street. So I still have to do a top-down analysis on NASDAQ. We've done one on US30. So let's just take a look at US30. So it broke down. So there's where there was a fake out, okay? I think I was talking with Mauro. Right there, Mauro, you see how it broke down? See the bullish ignited candle come right back up, and now it's pushing right back up. So this could be now they took out the liquidity down there, fake out, coming back up, But again, now we got to follow. We see it broke for a new high. That's fantastic. But now you got to follow the volume to see if it will close above. This could be, again, we're targeting maybe potential buy here to take it back up. But this is how like US 30 is moving right now. So that shows a little bit of a fake out down there. Okay, where it pushed down. It did close below. But look at it, how quickly the candle opened, ignited, bullish, and just continued, ignited all the way up there, then got rejected, closed. Look at what it retested. This candle retested the red line. The red line was support, support, support. There it broke down, there it closed above, and again it's support. And you could be in a buy on that candle alone, and you're up. It's, guys, you see what I mean? How it can really respect these technical areas if you know exactly what you're looking for. If not, you know, this is where now you got the closure volume above. So now we could be waiting to see if it will come back down and retest this yellow line to see if it could bounce off and continue to go back up. This is the first blue candle that's closed above this yellow daily point of interest. See, there is a 1 wick, 2, 3, 4, 5, 6, 7, 8 wicks before one blue body closed. Now closed. Now it's coming down for the retest. Right now is when I look to see, will it grab a wick right here or more into point of control of the bullish candle. You can see if I was to measure open, close, 50% is somewhere right around here. So not necessarily exactly this yellow line, but the yellow line represents higher time frame. It's representing daily point of interest. So if you're watching this, and this is now starting at 9 a.m., so just keep your eyes on this. If this bear volume closes back below here, then it looks like they're going to fake out the upside as well, just like they did the downside right here. Then you can tell that the market is just playing games. Then, like how they faked out down there, this could be another fake out where it closes bearish down in here and continues to trade in this really shitty zone right in here. I would consolidate all that garbage and wait for Wall Street if we don't get a good move. And then you can see if you go back to the left, again, it was shitty volume there. So you see now how it's coming right back in? This could be like a fake out up here and a fake out here, and the market is still moving nowhere, okay? So you've got to be careful too. I don't like trading this stuff. It's too wishy-washy for me, okay? But we'll revisit this in just a moment. Do you guys mind if I do NASDAQ while everything is developing? We got US 30 developing, gold, again, rejection, rejection. Red box can continue to push down. I would be targeting this purple line. Purple line meaning that was the previous daily high where we took that buy, and now it's retracing maybe the previous daily high could be daily support, okay, if you're in a sell. If it breaks there, you could be traveling right into this zone right here where it was the bull flag take us up, could come right back in there. Again, see guys how it retests these locations and continue to push down. Would I have loved to have been still in that? Absolutely. Okay. Wow. And that's a full, almost a full 100% retracement from where we bought in earlier up to there and coming all the way right back down. That's why, guys, you know, what goes up can come down and what goes down can go back up. Okay. Hopefully we're taking money out along the way. Okay, I'm going to do NASDAQ quickly, and then I need to go take a quick little break because I've been sitting at this chair now for 3 hours straight. Okay, so what we'll do is NASDAQ. Remember, NASDAQ is more kind of tech-related. AI has had a big run as of late. It still probably has more room to run. Okay, so when we look overall on the daily on NASDAQ, remember this previous double top all-time high, that was December of last year. We're almost there this year. We're almost in December. There was February of this year, double top, that drop. Here was Donald Trump Liberation Day and tariffs were announced and all kinds of shit down there in April and May. Again, we closed above right there. So can we flip that red zone green on the daily? Yes. Have we retraced back down into 22,000? No. So we've been making higher highs, higher lows, higher high, higher low. Higher high, higher low, higher high, a higher low as of Friday, and we have a big bullish engulfing candle opening up right now. Maybe on anticipation that the governments are going to open up. Okay, let's now work our way from the top going down. That's what a top-down analysis is. So we can figure out this wick right up there was the all-time high of NASDAQ so far. It was on October 30th, the day before spooky Halloween. 26,285 on this chart. Since then, we've been pushing down lower low, lower high, lower low, lower high, lower low. They really depleted it down on Friday. That's a lower low, but now it's coming right back up. It's still coming up, but it could be a lower high and push back down. But wow, look at like candlestick reading. It came all the way down, came all the way back up. Look at where it closed. And it closed off of this momentum coming up on Friday into the close. And look at that momentum continued with a bullish ignited open and continuing. This is just like a 5-minute pattern where it comes up like that and then it opens ignited and you could be in a buy right away. So if you bought that daily candle, that's a great candle. You probably hit your daily goal, maybe your weekly goal. That's almost a 400 pip candle. Okay, you know when we're looking for 40 pips, that's a 400 pip candle. Okay, now do we have anything? Okay, the overall trend on the daily is absolutely bullish. You can see all-time high, pull back, higher low, new all-time high, pull back. That's still a higher low. Still, if we go with the volume, it still technically could push up still, right? We have not broken down. Maybe if we see a daily candle break below this structure right there, that's where we could start to see NASDAQ starting selling off. And then that's where you could see like a head and shoulder pattern and things like that, okay? But we don't need to entertain that right now. What we got to do is work our way down, okay? So was this can we find our all-time high supply? Yes, orange line to the bodies. You know, I'm going to extend it down to those bodies. I'm going to make my zone a little further, a little bigger, and extend it like that, okay? Now, we've got a big bearish engulfing candle. I can cut that in half right there. I could basically see that the retest candle on November 5th tested right in 50%. But let's not guess. Let's grab our Fibonacci tool. I want to show you guys how the Fibonacci tool is a very powerful tool. 50% of that big bearish candle is right there. Yellow line for a daily point of interest. Can I find my point of control of that? Yes, I can. That body has officially closed. Right there, close below. If you did it, you stretch it into the future. Not one retest, but two in that red zone and push down. Just like how gold just did on the 5 minutes. If you were watching gold on the 5 minutes, same thing. Right there. See how it closed below and it retested back down. It came up, retested, and back down. Right there, just hit the purple line. If I was in that trade still, that would be a full TP. It's retraced that entire move where we bought, and it came all the way back down, right down to there. Okay? So if you didn't close out your entire trade down there, or majority of it, you really got to respect levels, okay? Now, see that zone? Stretched into the future. What I can see is that their sellers are lowering their offers in that point of control from the all-time high. What's going on now? Okay, there's a body to body. That's a point of interest right there. And look at how it's representing the highest point right now on today's wick. Okay, can I continue pushing down with this and going all the way down? This was a significant bearish engulfing candle on Thursday. Can I find the point of control of that candle? Can I find maybe 50% of it? I'm sure I can. Grab their Fibonacci tool, opening price, closing price. 50%, this yellow line where I had at the body, now I'm just going to manipulate it right at 50%. And I'm going to draw my bearish zone representing that bearish candle right there. And I can see today, look at, we're trading exactly, again, right into it, okay? So we're trading very strong into that bearish point of control. Did we continue to push down? Yes. Okay. Look at that big steep drop on Friday. Then the end of Friday, 2 p.m. and going into power hour, came right back up. And look at the closing and opening balance today. So you can see right there, closing on Friday. Look how we opened. Bullish ignited today. Okay. That's the lowest point of the day. You know, we don't even have a wick on today's daily candle. 25,120. Bullish. Came up bullish, bullish, bullish. Right here. Point of interest. Body, body. I'm going to place a yellow line there, okay? That was where a daily candle closed on Thursday and where Friday opened. I'm acknowledging it. It continued to push up, okay? I could also target Friday's high as a scalper because I know it's 50 points from this yellow line right there if I need to. Maybe I don't need to because what I could do is maybe cut so far the volume in half what it's trading at. But I'll leave it right there to represent Friday's high. So I can still see we have a really big bullish candle. We've came up above Friday's high. Bullish, 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 bullish. We made so far our high of the day. just kind of peaked above that point of control impulsively, and it got rejected so far. 25,487, and now they pushed it down. So we could be trading, consolidating in here. Maybe Wall Street will open up, continue to be bullish, break out the new daily high, and before we can reach our red zone or this daily point of interest, there's a body to body I'm interested in. If it can fill up to there, I got to respect that, okay, with a yellow line. And then I can now measure it from, if we break today's daily high and we move up to that yellow line, I know that it's exactly about 140 to 150 pips just to fill there. Yes, it could go higher, but we got to get up to there first and see what happens at that opening and closing balance, right? What if it just goes halfway? It breaks out impulsively from the purple to the yellow line. This is what I do as a scalper. I cut that in half and then I measure. If I know from the purple up to there is 140 pips, then I know from the purple to this, I cut in half is 70 pips. Say it's just simple mathematics. If you need to verify it, you get your ruler and there it is, 70, 75 pips, okay? So I know if I'm scalping to that yellow line is great. If I can get to that yellow line, that's even better, okay? But now, what happens if we sell down? So if it sells down, it still have a big bullish candle. We might find support right at this yellow line, maybe right at the bottom of this red zone. What I can do is, I don't normally do this because I know what I'm looking for, but for you guys, see right there, the bottom of the red zone is a point of interest because it was measured from the point of control of that bearish candle. So if it comes down there, that could be a buying area, 25,375. If that doesn't hold, then we can buy Friday's high, which was resistance, could be support today, okay? So now when we look at the overall pattern, okay, you see how it came up, all-time high, come back down, it broke, maybe it grabbed all that liquidity on Friday, and now we're continuing to push up. This has legs where maybe it wants to continue to drive this week. If they open up the government, we could see Wall Street and NASDAQ and Dow Jones continue maybe to rally. However, they announced saying, no, we're continuing to keep the government closed, then we might still see selling pressure coming down. So right now it's very strong on the daily, and it's still like following like a trampoline on Friday where it kind of bounced and continued with that momentum, ignited and continued to drive. So today's daily candle is very bullish, and it's following off of the return on Friday, okay? So keep that in mind. Yes, we are going against this selling pressure, but it is still very bullish today. On the 4 hour, let's see exactly. So we were pushing down on the 4 hour. It was coming down, lower low, came back up, lower high, pushed all the way down. There it is, 10 a.m. And then we started the end of the day, 2 p.m., 3 p.m., power hour, closed right at the high. There's the open of today's daily candle, 6 p.m., strong bullish 4 hour move. Next 10 to 2 a.m. is right there inside. Here's Europe. Open, small pullback, created the high of the day, closed, still bullish volume. You can see this 4 hour candle is going to close in 47 minutes. It's kind of just hanging around in this red zone still, doji candle still holding. So I guarantee you it's just small accumulation to see when Wall Street opens up. Will they redistribute back a new daily high, or is it going to come retrace down a little bit? Okay, so we have a strong 4 hour move in the market, but you can see it's kind of losing its momentum. You can see the size of the candles. Like, look how small it is. This one was small. This one, it wasn't as big as these ones. So maybe buyers are getting exhausted. Maybe sellers are going to step back in and push this thing down. Okay. Now on the hourly, let's take a look. There's the big, holy shit, what a V-shaped recovery. Okay. So it just kind of like sold on and came right back up. That's what we call a V-shaped recovery. Just came down and went right back up, okay? So look at the times when it came down. 9 a.m. on Friday, Wall Street. 10 a.m., 11. It stopped at noon. Then 1 p.m., 2 p.m., there's power hour, there's the market close right there. So when it dropped from 6 a.m., came down, it closed again right there. Now we continued all the way up here. Now you see the 1 hour candles are barcoding. Look at them, okay? In the top quadrant at the daily high, in this daily point of control, red zone, hourly, bullish, bearish. Come down, go back up, bullish. Come back down, bearish, go back up, bullish. Come back down, bearish. So this could be like exactly like that kind of gold trade that we just took, where, you know, we were waiting, where it came up, came back down, now it could be coming back down. So right there, if it kind of breaks there, we could start to see NASDAQ, you know, sell down a little bit. Is it going to sell like this and go all the way down? I don't know. First, we got to test, like right there, that big bullish candle. I would be looking at 50% of that candle. See how there's also a body and a wick? So you had some transactions that were located like right around this area. Here, here, and here. So I'm going to make that white. Just let me know if it comes down there. It's an hourly area, okay? But you see, if you want to kind of flag trap all this hourly volume, it's right there. There's the flag. It could be a bull flag that wants to continue to break out during Wall Street. It's still got higher low, higher low, higher low, and a higher low. So it is still technically moving up, but we do have some selling pressure coming down. I don't like trading this stuff. If this was like 5-minute candles too, I would be saying, guys, let's wait to see for a clue. Can they spike the high, reject it back down? Will they take this out, or will the bar close above or below here? Okay. And then if you measure kind of this overall move, it's still bearish. So this could have been a return coming all the way back up, but we're still inside here where they could continue to drop this thing back down. Okay. Now from the hourly, I go to the 5 minutes. This is our 5 minute. There's the opening right here. We're opened at 6 p.m. Big move. Retrace right back down. If you wanted to catch the pullback, okay, remember, if you missed this big bullish crazy candle at the open, all you had to do was this. Look at how simple this is. Grab your Fibonacci tool, open, close of that volume. Can you literally identify where 0.5? I'm sure you can, okay? Why? Because my daughter can do this. She's 9 years old. She does this all day. She's a better trader than me. You should see her journal. You should literally see her journal. She's very patient. Because I tell her, if she patiently waits to take buys, I buy her toys. She works for toys, not for pips. Okay? Look at that. Are you telling me that did not come in right into 50% at 7:05? That was 1 hour later. Right there. You could have literally, if you missed FOMO buying that high, you teach yourself to wait patiently for it to come back in. It literally came right in there. You could have had a pending order, and how much drawdown did you realize? Nothing. How much profit did you realize? A lot, okay? And now with that zone, stretch that into the future, right? We are nowhere near this zone. But what happens if it does, or tomorrow come back in there? Maybe that might be another opportunity we could buy out of there, right? How are we going to wait all day to watch it come in there? No. See that red line? Right click it, add an alert, create it. When it eventually comes down there, I will be alerted, right? And I'll get alerted. That doesn't mean I just buy blind. I'll watch and see what's happening in there. My bias is to buy. However, if the sellers close it below there, then I know it's coming down with some heavy selling pressure. I could flip that box green to red and sell off of it. But a lot of transactions will take place back at that location. Okay, that's representing the entire opening balance of the first hour of today's daily candle. Okay, and since then, it's made higher highs, higher lows. Higher high, higher low. Look at now we're struggling. Like NASDAQ is struggling to continue to break up here. So we could be like breaking down during Wall Street, or it could come right back up. But right now we have lower highs from the daily high, okay? So this is what we got to watch going into Wall Street. Let's add our daily bar indicator beside us. Strong bullish daily candle. Holy shit. Like there's that opening bullish move. We're transacting right near the highest day, right with a little bit of a slight pullback. Wall Street could open and just break right through this again, okay? So strong daily candle. We're trading right near almost the highest point of the day. We are currently below the 9 EMA, but we definitely are above the 200 EMA, okay? So we'll keep NASDAQ over here on the right side of the chart. If you're trading NASDAQ, NASDAQ is on the right. If you're trading US30, you see how nothing kind of materialized up there? There was a fake out up there and a fake out there, and they're still keeping the volume trapped inside here. So they're faking out the market right now. I would wait now for market open, okay? It's still accumulating in here. They faked out the sellers and they faked out the buyers. And the volume is still transacting in this neutral zone, okay? And gold, holy shit. Gold transacted right down into that zone right in there. So, man, wow, okay? So gold, I love trading volume like this. This is fantastic volume to trade for a scalper. Goes up, comes back down, maybe one more leg coming up, maybe, but it's much better than trading all this. Like, look at this shitty volume, okay? So this is when the markets really are opening up. Beautiful. Same with this type of volume. On NASDAQ and US30, I hate this volume. It's moving nowhere. You see, it's just going down, up, down, up, down, up. So this is a volume you want to avoid. This is volume you really want to trade. Okay? Two completely volume styles. Okay, guys, do you guys mind if I just go grab a quick drink? I know it's 9:20, but I'll be back in 3 minutes, okay? I got a fridge right down in here. Just going to come right back real quick, guys. Don't leave me. Hit the likes, subscribe to the channel. We'll be right back in just a minute here. Okay, everyone, we're back. Okay, so we got US30 making a push. NASDAQ is still inside here. We're about 6 minutes away from market open. So, you know, I'm not in a trade so far. We've done pretty well with gold. So, guys, this is now like managing account. So now I got to determine from my profit how much I want to risk in Wall Street, right? So I want to retain a little bit of money. I didn't just trade all day for nothing. So I'm not going to just go in and risk everything that I just profited. Like I said, I'm above my daily goal, so I might risk a little bit above my daily goal. But if I do realize a stop in Wall Street, I'm going to still walk away with my daily goal, right? So that's how we got to look at trading, guys. You have to learn at some point how to not just manage your risk, but you also have to learn how to manage your account, okay? Because trading is very difficult. Trading candlesticks is as difficult as it can be, but also managing an account is another job. Managing your risk is another job. There's multiple jobs we got to do as traders here, okay? So like right now, I'm telling you the honest truth. If I wasn't on YouTube or if I wasn't on Zoom with you guys, I would not even be looking to trade Wall Street right now. I've exceeded my daily goal. I would be making breakfast right now and going in the sauna. That's what I would be doing. But right now, we got to still watch and see what's going on here, okay? So that's the beauty of trading. Sometimes you might hit a goal prior to even Wall Street market opening up, okay? But let's see, okay? Remember, we're coming off of a weekend. Remember, Friday was after 2 p.m., 3 p.m., 4 p.m., there was a big rejection on that selling day. So that could carry momentum going into opening Wall Street. If you look in the pre-market is pretty green right now for most big name securities. Like Oracle is up 2.5%. Let's see what else here. AMD is up 3.4%. Micron is up 4.1%. Uranium Energy is up 5.5%. Nvidia, holy shit, is up another 3.6%, all-time high. Meta is up 2%. Google is up 2%. Microsoft is up 1%. Amazon is up 1.6%. Tesla, 2.2% up. SoFi Technologies, 3.15%. Apple is up 0.5%. Palantir up 3.5%. Like, wow. SMCI, Super Micro, is up almost 5% right now. So tech, semis are real green in the pre-market. So that is has a lot to do with NASDAQ. And so very bullish pre-market, okay? Now, are they going to is the market going to open up at 9:30 and boom, it's going to be bullish? Or is there going to be some selling pressure coming in? Because remember, maybe there was a lot of buying on Friday afternoon, buying in the pre-market, and then buyers are in the money right now and are waiting for the market to open up to sell, right? They could have sell orders right at the opening bell at 9:30, and then that would cause a black candle to come down. But it could just be that those buyers are just profit taking, right? And there's going to be a seller there to sell it to them, and then when it comes down, we could be possibly looking to buy maybe a discounted pullback on a green day, right? So that's the way how you got to kind of narrate walking into Wall Street. Like right now, you see how US30 came up, again, testing that red line, and then got rejected, coming back down. Same with NASDAQ, came all the way back up here and got rejected. So let's now go into Wall Street in the next 2 minutes and 20 seconds. Another reminder, guys, a lot of retail traders, including myself, we make silly mistakes. I was just trading gold all morning, and I now switching to US30 or NASDAQ, I have to use a different contract sizing because I can't use the same size I used with gold because they're different securities. So I have to change now my sizing, and I have to also see the spreads on US30, what's going on, or NASDAQ. So we'll watch, okay? And have rules going into Wall Street. Some of you guys might be already in a trade, waiting for market open. That's fine. Some of you guys might be waiting for a 5-minute candle to open and close before you do anything. Some of you guys, again, wait till 9:45 for a 15-minute candle. Some of you guys don't even trade Wall Street. You wait till 10. Whatever is your plan, please stick to your plan, okay? Some of you guys might be scalping 1-minute candles, okay? I understand that too. But regardless, whatever you're doing, okay? If you're still on gold, okay, you see how it came down right into that zone right there? Came in there and bounced right out of it. So if you were selling, that would have been a good location to, exchange the bag right in there, okay? I think we did good on gold. Let's see now with the markets. And they could be choppy, right? We got a lot of news. They announced that U.S. government could be possibly opening up. That's good news, but we'll see if that actually in fact happens. Here we go, guys. So 40 seconds to go. Pick your security, please, what you will be trading. And thank you guys for hitting the likes. We do appreciate it. Also, subscribe to the channel and hit the notification because we're going to do a live Tokyo session later tonight at 7 p.m. So don't miss out. We'll be watching gold for that entire session. Okay, and here's market open in 5 seconds. Okay, so it's open bearish for US 30. Let's see how far down it will go. Will it come down, take out these lows? Will it just transact in that? Okay, big flip. So it came down, flipped bullish. That's sometimes where some traders look to just on that flip to buy, right? I'm not looking for that, okay? If I did, I would have made up my mind right away. It would have been beautiful. That's what scalpers look for. See how it flashed black? Came right up. There's your consolidated play and then breaking out. That's like what a 1 minute scalper exactly looks for, okay? I know it's fast and it's furious, but you got to know exactly what you're looking for. When that candle opened, it was bearish, 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 came down and flipped. Right as soon as it kind of broke above that right there, you could have literally entertained a buy if that's what you're looking for, okay? And that's, you again, like the first 30 seconds of the candle went right through there, targeting. If you missed it, I wouldn't recommend just going now and buying the highest point right now, okay? Because then, again, you're just FOMO buying. It's not a good rule of trading. We got to wait and see where it closes. Maybe we'll identify the point of control of this candle. We'll cut it in half. Maybe we might see a discounted pullback. Maybe they reject this all the way back down. Who knows, okay? I told you guys, I'm waiting for the first 5 minutes. So I can't make excuses for the first 30 seconds when I'm waiting for a 5 minute candle close. But I'm telling you, if you are like a 1 minute trader, that's exactly what you're looking for. Okay, so did we take out the daily high? Yes. Did NASDAQ so far take out the daily high? Yes. Can we wait and see, will volume close above there? We got to wait 3 more minutes. And I know some of you guys are in buys. Congratulations. But what if you were selling at market open and got caught in that huge bullish candle? If you look at the range, now range, not the body. The range is the lowest point to the highest point. That is a 110 pip candle right now, okay? So if you were trading with a tight stop loss and you were over leveraged, the market maybe got you right at the opening bell. Okay, so it came up really nice and took out the high and got rejected so far. So now it's coming right back down. Okay, so we still have 2 more minutes and 20 seconds to go into the close. That's a lot of time. Okay, that's a nasty wick. You know, it took out the highs, getting rejected, but where will it close? We have some FOMC speakers speaking right now. Fed's FOMC speaker Daly was speaking here. Now we got Musalem speaks. Who's been here the longest? Probably me. Probably me. I've been sitting here, now it's going on almost 4 hours. So I've probably been here the longest out of everybody. Okay, so what's the first thing we're gonna do when this candle closes? Muski, you've been here for 2 weeks and all the trades that you have taken are W's. Amazing. Amazing. So make sure, please, you hit the like button and subscribe to the channel. Okay? Because it costs you nothing to get all those W's for the last 2 weeks. Okay, turn to green. First thing is what we're going to do is flip this big red zone, maybe to represent a green zone, because we've got first 5-minute bar closing above, right? We haven't had that yet today. Okay, so that's first thing I'm going to do. I'm going to do it right now with going into the close. I'm going to assume it's going to close. Okay, can do it for both securities. Okay, so now if I'm waiting for a discount, right, I could cut that bar in half. Look at it. The cut line is right at the top of the zone, right? NASDAQ opened ignited bullish. Okay, so I gotta, there's a lot to do here. See how the red line, 50%, is exactly the green zone? If I want that 5-minute point of control, if it can come down and give me a nice retest there, I could be entertaining a buy there, but it hasn't came down yet. That was the most recent pullback right now, so it could continue to drive without pulling back in here, right? That doesn't mean that I still can't wait, okay? You either got to take the buy now on this candle, or we got to wait, right? Patience. NASDAQ already took off, okay? It was ignited from the open, ignited, continued to fill the wick, and continued to drive. So you got to, that's what I was saying. You got to understand what are ignited candles. It's very difficult for me to explain everything when we got 2-3 charts moving and we're scalping, okay? So that's why I said you guys got to, learn how to do this and kind of follow what's going on. Because you could have literally bought the open of that candle when you saw how it was ignited. But if you didn't, that's okay. That doesn't mean that you got to buy this highest point, okay? You got to understand that. Just because you missed here doesn't mean you have to buy the highest point. Believe me, I that was a big lesson I had to learn in the markets. That's why you probably see me not looking to buy up here. I'm waiting to get a pullback in here. I'm not the only one waiting in here, right? There's a lot of other institutional orders pending in here. So I'm not the only one, right? So if it comes down in there, I would love to buy a pullback and then maybe take it back up. But it might not come down to me. Why? Right now, because this is Wall Street volume. So Wall Street volume could continue to move up. Maybe it might come back later on this afternoon. Okay, but that doesn't mean you can't acknowledge where it is. That doesn't mean you can't set an alert there just in case it comes back. So market open is very bullish right now. This is the first 7 minutes. Are you guys getting better at controlling yourself from not buying these highs? Because that's exactly, remember when we talk about why retail traders fail is because FOMO, fear of missing out. A lot of times when you buy the highs is when it reverses on you, okay? And the same thing too, if it sells, it's going to go down, you FOMO sell and you sell the low and then it goes back up, okay? So just get in the habit of just, if a trade goes, it goes. Who cares? It just like gold, if we miss this entire buy, look at how it came all the way right back down. So like US30 is going all the way up, but there might be a point in time today it will come back down. And then maybe you could buy in there and then you're buying it at a discount and maybe you're buying with more buyers where you're not going to realize any drawdown. That's just the game of trading, is the ones that get paid are patient. The traders that lose money are the impatient ones. And once in a while, yes, you can buy the highs and you're rewarded. We were talking about that in our boot camp yesterday, that sometimes the market rewards bad behavior, right? Sometimes if you buy the high, you'll get rewarded with making some money. But if you learn that it's a bad habit. It's not always going to happen like that. Okay, ask any FOMO trader, any FOMO retail trader, if they've made money long-term consistently like that. Probably not. So sometimes the market will reward you for trading not correctly, but you don't want to learn that habit. Learn the opposite. Learn how to buy a pullback. If the market is selling, don't just sell the lowest point down here. Learn how to sell a pullback at a premium area. Just think about that concept, how it makes sense. And another thing, guys, why I'm not as aggressive right now to take a trade is because I've already exceeded my daily goal with the gold trades. That's another thing. If maybe I didn't take any gold trades, maybe I would be a little bit more aggressive to, you know, buy that candle, right? That 935 candle. But, you know, so that might be a factor why I'm kind of sitting out of the market right now. And I know you guys, it sucks because you guys want to trade, right? But I'm also going to protect my profit for the day too. I'm trading with you guys live. It's not just, we're just here to have fun and games, right? Some of us are actually, you know, trading real money here, not demos. And it's a good way to start the week. You start the week Monday with a good day. Maybe this will translate into how you trade the rest of the week. But if I take a stupid trade right now, and then I get stopped out, that might now affect the way how I trade tomorrow, right? So I want to stay in a good with the market right now. But if I can get a nice decent pullback, I'll entertain a pullback. Okay, so now we see a black candle coming down, right? I just cut that blue candle in half. Let's just see if it can hold 50% and go back up. If it breaks a little lower, I might be buying down in here, but ultimately that first 5-minute breakout was right there. Holy shit. Palantir is up 6% to $189 a share. Wow. That thing is on a tear. Gold, guys. Gold is breaking down. You see? Did it close below that? Yes. So it's still breaking down. You can go red. You see how all of these green zones can be turning red? You know, but it came down to the white line. That's the 4-hour support. Okay. Sherry, you're profitable today as well. Congratulations. Sherry's trading her live account, doing really well, and also passed a prop firm. So Sherry, congratulations. It shows that you're consistent with your live account and consistent with a prop firm account. So slow and steady wins the race. And you are a testament to that. So thank you for really managing your risk and being a very disciplined trader. And you can see how the market rewards good habits, good behavior. Sherry, okay, if you could tell us as a group, everybody here, what is it that helps you become so consistent? What is it? If you could help some of us that are inconsistent with our trading, what is one thing that you would help us out with? What is one tip that you can give us that's helped you? Okay, her answer, guys, is risk management and capital preservation. Preservation and patience, okay? So patience, protecting your capital, and effective risk management. That's it. That's like a recipe for success in trading. Okay? Again, if you're impatient, you're probably going to make some mistakes. If you don't have good risk management, you're probably going to over leverage and not know what you're doing. And if you can't protect your capital, you have no more money to trade in the markets. So those three things, guys. I know it sounds pretty simple, but it's also very difficult. Now we've got a US 30 black candle coming all the way down, okay? There was some traders who bought the highest point. Now we could be waiting to buy at a discount, okay? So now it's retesting this. Has it came back down into that big green zone? Almost, but has not tapped into it, okay? So let's see now. It's bearish coming down. It held, coming back up. Where will it close? We've got 1 more minute to go. We're also going to get a new 15-minute candle opening up in 60 seconds. So if you're a 15-minute trader, you might be waiting for this full 15-minute body to close as well. Okay, I'm a 5-minute trader, so I'm watching to see where this thing can close. And NASDAQ is still taking off, okay? Remember, this is a daily point of interest, yellow line, 25,565. If you bought at Wall Street, I would be entertaining to do something at that yellow line. Number one, if you bought, you should be at a break even. Maybe scale out a little bit or have a trailing stop loss. That's how you can effectively manage your risk, okay? So, but here we go. Here's the close on US 30 and NASDAQ. Okay, so you see sellers are bringing it right back down, closing, engulfing. See that big push down right near the close? Okay, so this might continue going into the next bar. Let's see. However, okay, bullish ignited open. So let's see if there's a quick rejection. If not, it might refuel itself to come back up. Okay, so let's see if there's a quick rejection. Not yet. Okay, so there's the rejection. Let's see if we lose our opening balance. It's still holding, still refueling itself, still holding. Okay, so it's still holding. I'm going to buy, okay, because it's still held. So what I'm going to try and do is take it back up to the previous candles. I'm going to place my stop loss below the green zone, right through there. Okay, it's a tight stop loss. I've reduced my risk, so if I get stopped out, I still do good with my gold profit. So I'm not really going heavy on this, but I'm going to test to see if we can just continue to fill back up to this red line, maybe get ultimately up to those candles to see if it will hold this purple line. But if it needs to come back down, then maybe it will tag into the point of control of right there. And that's why my stop loss is just below it, just in case it comes down into here, okay? So it's in drawdown right now. I went in how it held that bullish ignited open for 3 fills, but the sellers are strong. So let's see now if it comes deeper down into here, this point of control, if we can find some bigger buyers down in there, okay? That's why my stop loss is just below it. And then if we can come back up, maybe to that yellow line, okay? So I'm testing out a buy. I know I bought in a little early. Maybe I should have waited a little longer, but that candle was bullish ignited, came up, went back down, bullish ignited, came back up the third time I went in. And then this is when they dropped it down. So now I just got to effectively watch to see how it will react in this green zone. Okay, so far it hasn't tagged into the green zone. We're back down, we're back up to the opening balance of our candle. So let's see if we can turn it blue and come back up. We don't have a big wick to fill back up to our high of this candle. So it's kind of like a spin top indecision candle where you do have some buyers at 945, some sellers at 945. It's not going to just trade in this location very long. So there's going to be either a move coming back down to test in here, or we're going to come back up. So here's the actual test now, okay, right in here. Now we're at the heart of the green zone. This is where I'd like to see a wick located in here and to see if the buyers are here. Okay, so far there is a wick. It's not one of those sharp returns that just goes right up. It's got a little bit of a return, and then the sellers are still coming through here. So my stop loss is just below here. If it breaks this green zone, I don't want to still be in a buy because the sellers now take full control and they could be now bringing it down below that Wall Street point of control. Okay, so the wick is still there. The candle still has 2 more minutes to go. But while I'm still in it, I still got to watch and see where it will close. It is currently in drawdown, but you see it got a good wick right inside 50% of that point of control. And now the buyers are bringing it currently right back almost up to the opening balance again, but still failed because it's still got that black candle. So sellers now, again, offered at the opening balance. So you see that they have the upper hand. Okay, the buyers brought it up, but they failed to get it back up to that opening price. So now we're tapping into here again to see if this depth of market can continue to fill with pending buy orders and get activated again. And we have a close in 60 seconds. So you see it came down in here again, picked up some more pending buys and coming back up, but we're having a difficulty getting it back to that opening balance. Every time we get it up there, the sellers push it down. Now we're again right back at the opening balance with 49 seconds to go. So can we flip the candle back up positive after we've transacted in our point of control, and maybe we can move up with the next candle? But you see, wow, so there's a lot of selling pressure still at that opening balance. Holy shit. After we picked up 3 kind of large pending orders in this zone. So still not confident, but it's still technically holding. And then here's the close in 10 seconds. So the sellers brought it right back down, closing at the lowest point. That's not good because the next candle could open ignited and continue push down. So I have to effectively watch my stop loss down here. I will let you guys know as soon as I get stopped out. Okay, I'm still in. I haven't got stopped out. Remember, my broker is just a little bit different than this trading view. So I'm still in it. They didn't tap me out. But now they're coming down. Almost got me. Still have not got me. Still holding it. Man, it just missed me by a tick. I'm still holding it. Still holding it. There's a lot of selling pressure coming down. There, they got me. Okay. So I got out. You see? So that point of control, you see, held 3 times. But when we came up to that opening balance, you see, we couldn't flip that candle blue. Because if we did, then the next candle would have closed right there and then been blue to come return back up. But they really pushed it back down near the close, opened this one, ignited, and broke down a little further. So I can still, if I'm still trading, I could still follow this. Now we're transacting right back in there. So they got me, they stopped me out, I see that. But if it trades back inside here, again, it's still accumulating in that zone. So I still look to see if it will close back above there, bullish, or will it close back below here, bearish. Okay, so I tried to buy a discounted pullback. It didn't work out. Okay, but I told you guys I was reducing my risk substantially on that trade because I didn't want to give back my daily gold, what I made on gold. So now you see how Wall Street can make that big bullish move and it comes all the way right back down. Okay, so nothing goes up forever. And then I get out of the way, okay? If that, like, again, where I place my stop loss, if it's not holding, the green zone would have held. You see when it came in, back up, came in, back up, came in, back up, but it couldn't close above there. Then it closed back down there. It was holding just by a little bit, by a hair. I told you I was still in it, but when it came back up, you see it's still not closing. So still showing selling pressure coming down. Lower highs, lower low, lower high, lower low. So now if I'm not gonna continue to trade the rest of the day, but if you are, I would make note of this high. We're coming right back. Remember this consolidated zone prior to Wall Street market opening? They're returning it right back down inside here. So it looks like they just broke through the open, coming all the way right back down into here. It's good volume. This is great volume. At least it's not like consolidated. At least you see a big move up, a big move down. So it could potentially come back up. It could go break through here and continue going down. But guys, that's it for me. I'm not going to trade anymore. That's it. I'm going to walk away with the goal. And it's been a long time sitting at this chair here, so I'm going to go stretch. We have a second session coming later this afternoon. It will later this evening. It's a Tokyo session. It's going to be 7 p.m. Eastern. If you want to join us, we'll do gold. We'll do it for like 90 minutes, 2 hours, 7 to maybe 8:30 to 9 p.m. And then again tomorrow, Dave will be doing New York, and then I'll be coming in for a post New York session and also an additional Tokyo session tomorrow. So visit our website. Here's the schedule for this week. You can see what sessions are private with Dave, which ones are on YouTube and Zoom. And there's a free blog available for everybody. If you guys want to read about New York trading session, losses in trading offer valuable lessons. I just took a loss there. Got to learn my lesson. Maybe I should not have traded Wall Street while I hit my daily goal. That's a lesson, guys. See? Knowing, some of you guys were asking how to identify point of control. This is what a point of control is. Read the Tokyo trading session because we'll be doing this a little later this evening. And then there's more blogs available all for you down here. Guys, if you want to join the team, we would love to have you guys on this team. Join us. Lots of education, lots of live trading with myself and Dave. Also in our Discord, there's a lot going on in the Discord with all of the other snipers inside here. There's Tyler's doing really well. He's killing it in the commodities channel. Here's Tyler doing it. Like, guys, this is big profit, okay? These are with standard and half lots. He's, I think, hit his weekly goal. And there's a lot of good traders in here offering their charts, their analysis. We've got some mentors in here as well that are helping out the team. So if you need a good Discord community, hopefully the SST team can help you guys here. And there's a free Telegram channel linked for everybody at the top of YouTube. It's all available here with all of our live links, promos, discounts, blogs, before and afters of the trade recaps, the signals, all of these things. Okay, guys? So thank you guys for the likes. Thank you guys for subscribing to the channel. We do appreciate you guys. Hopefully maybe we can hit 88,000 this week. That would be a big goal and on our way to that psychological 100,000. But thanks, guys. Have a great day. If you're going to continue to trade, and just be safe. Remember, trading, they may announce that the U.S. government open up, and that would be very good for the markets volume-wise. And we'll see how everything moves this week. Remember, we do have some high-impact folders coming later this week. Thursday and Friday, we have CPI and PPI news. And don't forget, tomorrow, U.S. banks are closed due to, Canadian banks are closed for Remembrance Day, November 11. So we'll still come in, we'll still do some trading, but just keep in mind that U.S. banks will be closed tomorrow for Remembrance Day, okay? Thanks, everyone. We appreciate you guys. Hopefully you guys have a good start to your Monday and a good start to the week. And we'll see you guys later this evening, and we'll see you guys also tomorrow, okay? Have a good day, guys. Enjoy the rest of your day. It's breakfast time here. Have a good day, guys. Thank you so much. Have a good day, guys. Take it easy. Enjoy the rest of your day. And if you're going to join us, 7 p.m. live videos. Enjoy your day.
Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.